ஒன்னே சேர்த்து விட்டுறேன் ஷர்ட் போட
Good evening, sir.
Good evening, good evening. Good evening to all of you, and warm welcome to the last session of retail banking numericals. See, day after, I think the exam is on Saturday, no?
Yes, sir.
All the best to all the participants. In advance, good wishes.
Thank you, sir.
Be cool and calm. Face the exam with confidence. The only one appeal is don't think that this is a very easy paper. That keep it in mind. There is a general feeling compared to all the three papers, retail banking is supposed to be the easiest one. Maybe true, but you can even go wrong in some of your options. So be very careful. Face the exam in a very confident manner and thorough the topic. Another one day is very, very crucial. Utilize the time effectively, as all the faculties, especially our MD Sadish sir, daily is giving you every day on booster dose. He is giving in the morning to motivate all of you. So take it very seriously, and all the best to each and everyone. At this session, I'll be touching on reverse mortgage, then capital gain 1 or 2 problem, then education loan, some concept, and on income on house property. Also, I tried to explain some points, important points for your information. Then few introduction. I'll spend 5 to 10 minutes on depreciation, which we were discussing in the morning. There was some, I'll say in our risk management term, there was an operational risk in the morning. There was no internet connectivity, so I was using my mobile phone. So I could not share the PPTs and the whiteboard. So I'll be spending some few minutes because we already covered the depreciation, but still I will spend few minutes because some of you are raising so many doubts, even though the topic is very, very simple. Let me wait for 1 or 2 minutes more because it's going to be 7:30. And in the meantime, I would like to inform that we have shared the numerical which has been discussed in the morning on straight line method and written down value method. I had already discussed it in the morning session, but still the solution I had prepared and that is shared. So you can go through it. If anyone is having any doubt, you can put it now. Hope that it is clear.
Yes, sir.
Okay. So let me start the depreciation concept. See, now the time is not there for going into the exercises. I have given the solution for some 10, 12 questions, problems. And you can, in between, if you are not able to understand any of the concepts, you can put it to me, which question you are not able to understand. I will throw a light on it. Now, I'll just explain using the whiteboard some of the important concepts in depreciation.
Credit card, please, sir.
Pardon?
Credit card, please, sir.
Credit card also. Okay. See, in depreciation, as far as your course is concerned, you have to study on straight line method and written down value method. So straight line method, the name itself indicates it is straight. That means it is, you can say it is fixed or it is constant. I'll give an example. Suppose there is an asset and the cost of the asset is 1 lakh. And this is the cost, original cost. And remember, in the case of original cost, you have to include all the incidental expenses that had been incurred to acquire the asset. That means you have purchased a machinery or an equipment or whatever it may be from a far off place, you have to incur the transportation expense. So that you can add. Then again, you have to incur some amount for installing the machine in your factory. Means the person who is buying it. So the transportation expense, then the installation expense, then any preliminary, that means any overhauling expense. Sometimes some firms, they purchase a second-hand machinery. So in such a case, it may require some repair or some maintenance before putting it to use. So all these costs can be added together and that form the cost or original cost. 1 point. Next term here is salvage value. What is meant by salvage value or residual value or scrap value? See, a person has acquired a machinery. He had put it to use for some time. And after some time, he is, please, switch off your video because it gives me a disturbance. Okay. So scrap value is the amount which is realizable at the time of selling the asset on scrap. Fine. So suppose this particular machinery, the cost is 1 lakh, its scrap value is 10,000. Now here you have to calculate the depreciable base in respect of straight line method. What is the meaning of depreciable base? Depreciable base is nothing but the cost minus salvage value. And here in this case, it is 90,000. So the depreciable base is 90,000 in the case of straight line method. Fine. Now this, and here suppose the useful life of this machine is 10 years. So how do you calculate depreciation under straight line method? A very, very simple formula. You can note down it. The formula is original cost minus salvage value divided by useful number of or useful life. So here it is 1 lakh. Please mute your mic. 1 lakh minus 10,000 divided by 10. This gives you 9,000 rupees. So under straight line method, the depreciation per year, this is per year, is 9,000. That means first year depreciation is 9,000, second year is 9,000, third year is 9,000. Throughout the useful life of the asset, the depreciation has to be provided every year at the rate of 9,000 rupees. Is it clear? Now I'll move on to written down value method. Now here, in the case of written down value method, this principle doesn't apply. Here, what is happening in the written down value method? In straight line method, it is constant. It is fixed. Every year, the depreciation amount is fixed. Now coming to written down value method, here the depreciable base is not 90,000. In the case of written down value method, the depreciable base is 1 lakh. So remember, write down somewhere. In the case of written down value method, scrap value is not taken into account. Fine. Now, so here and in the question, in the case of written down value method, they will definitely give you the percentage. So suppose in this case, the percentage is 10%. So written down value method, the percentage of depreciation is 10%. So if the percentage of depreciation is 10%, first year depreciation, how much? 10% of 1 lakh. How much it is coming? It is coming 10,000 rupees. So this is the depreciation amount. This is the original cost. At the end of first year, the book value becomes 90,000. This book value can be also called as the depreciated value or the written down value at the end of first year. So the depreciated value at the end of first year or the written down value at the end of first year or the book value at the end of first year or beginning of second year is 90,000. Whereas in the case of straight line method, the original cost is 1 lakh. First year depreciation is 10,000. So here the book value is 90,000. So at the end of first year, for both straight line method and the other one, the depreciation, sorry, here it is 9,000. sorry, 9,000. So you are getting 91,000. Yes, you are getting 91,000 as the book value in the case of straight line method. Whereas in the case of written down value method, the book value at the end of first year or beginning of second year is 90,000. Now you calculate depreciation for second year. So second year, you have to take 10% of 90,000. So remember, the percentage never changes. The percentage is fixed, but the amount changes. How much is the depreciation amount? That is coming to 9,000 only. Why? Because the amount on which you are calculating 10% has been reduced to 90,000. Earlier, you were charging depreciation on 1 lakh. Now, after 1 year, you have to charge depreciation for 90,000 only. That is 9,000. So the book value at the end of second year or the book value at the beginning of third year is 81,000, and it goes on. Now, here another point. In the case of written down value method, in straight line method, I gave you a formula: original cost minus salvage value by useful life in number of years. And here it should be, you can have the formula A is equal to P into 1 minus R the whole raised to n. Where what is A? You should understand this means this is the book value. And what is P? The original cost. Minus what is R? The depreciation rate. And this number of years. You can use any formula. This is the concept. Why I have used this formula? Because you can compare this with your compound interest formula. In the case of compound interest, it is A is equal to P into 1 plus R the whole raised to n. There the plus symbol comes because in compound interest, every year the interest is added to the principal. In the case of depreciation, instead of addition, the depreciation amount is deducted or subtracted from the original cost. That's why I have used the symbol minus. So if it is 1 or 2 years, you can year by year you can calculate. Suppose it is third year, fifth year, ninth year, like that the question comes, then it takes more time. So in such situation, you can use this formula. Fine. Now here some more terms you have to, because even though the concept appears to be very simple, that in the question they may ask, number 1, what is the depreciation amount? Depreciation amount, number 1. Another, they will say the total depreciation. Number 3, what is the book value? And or the written down value. Like that the question will come. So here, if the question is what is the depreciation amount on say third year or fourth year, like that, it is the depreciation you are providing for that particular year. If it is
there any term rate of depreciation?
Rate of depreciation. I'll explain. Now, next is what is the total depreciation up to 5 years? That means you have to add up first year, second year, third year, fourth year, and fifth year. So that will be the aggregate or total depreciation. Next, what is the book value at the end of fifth year or at the end of ninth year? The question will come. So there, how do you go? You have to first look at what is the original cost. Then you calculate how much depreciation is provided, that you subtract. So the book value or written down value means original cost minus total depreciation provided. That will be the book value or written down value. Now there can be a question. See, one of the participants raised, what is the average rate of depreciation? Now I'll come to an example. Suppose there is an example where under straight line method, let us discuss the original cost is 1 lakh and rate of depreciation is 10% and the salvage value is 10,000. Now we have calculated that per year depreciation is 9,000. So this means the useful life is 10 years. So total depreciation provided for 10 years is how much? 9,000 into 10 That means 90. So what is the rate of depreciation? So you have provided 90,000 on which amount? For 1 lakh. So what is the rate of depreciation means? For 100 rupees, how much you are providing? This will give you 9%. This is the average rate of depreciation. Suppose in the question,
90%, sir.
huh?
Sir, can you repeat?
See, cost is 1 lakh. Rate of depreciation is 10%. Or useful life. See, if useful life or rate, anyone they can give. Suppose in the straight line method, instead of useful life, wait. In the case of useful life, they are giving the rate of depreciation as 20%. Means what? How do you calculate the useful life?
100.
Useful life is 100
100.
by the percentage.
5 years.
Yeah, it's 5 years. That's the meaning. So here I gave you 10% is the rate of depreciation under straight line method. Now the question is, what is the average rate of depreciation? That means you are providing every year 9,000. So the total amount of depreciation you have provided is 90,000. Am I correct? Because 10,000 is the salvage value. So at the end of 10th year, there is an element of 10,000 in the book value, in the books of the company. And this becomes 0 when they sell it for scrap. So that's working. So what is the average rate of depreciation? You have provided 9,000 each for 10 years. So total amount of depreciation you have provided is 90,000. On what amount? For 1 lakh. So what is the percentage? For 1 lakh, you have provided 90,000. So how much you provide for 100 rupees? 1 lakh upon 90,000 into 100. You get the answer as 9%.
90.
Sir, 90%.
Around 90.
90,000 by 1 lakh. 90%.
Sir.
Pardon? For 100 rupees, how much you are providing?
90%.
90%? How 90%?
Yes, sir. 90,000 by 1 lakh, no, sir.
Now, on 1 lakh, you have provided 90. So this 4 zeros. Okay, 90, but it is 9%. See, for you are providing depreciation 9,000 for 1 lakh or per year average.
100 divided by 10 is there, no, sir.
9,000
100 divided by 10.
Yes, 9,000.
9,000.
Yes, 9,000 by 1 lakh into 100. You will get us 9%. 9,000 you are providing for 1 lakh. So 9,000 by 1 lakh into 100. You get the percentages. This is average rate of depreciation.
Sir, from where we will get 9,000?
Pardon?
9,000 from where we will get?
9%.
9,000.
What is 9,000? See, the question is, see, I'll repeat once again. The question is, what is the average rate of depreciation? So, see, for 1 lakh rupees, you have provided depreciation 9,000 per year. So what is the average rate of depreciation? For 1 lakh, you have provided 9,000. That means for 100 rupees, how much you are providing? 9%.
Here depreciation is 10%, no, sir?
Depreciation is 10%. Depreciation is 10%. But salvage value you are taking into account. See, time, we are wasting a lot of time. The concept is not understood, I think, even now. See, the cost is 1 lakh, but the salvage value is there. I told you to compute depreciation, the straight line method, you have to take into account the salvage value. That salvage value 10,000 has to be subtracted. So the depreciable base is 90,000. You have to provide depreciation per year for 90,000, and per year depreciation you got as 9,000. Am I clear?
Yes, sir.
No, not clear.
Clear, sir.
Sir, second time we are taking 90,000 to 10% is 9,000.
Second year?
Second year from 90,000 to 10% means 9,000.
Second year also 9,000. Straight line method, second year also it is 9,000 because you are giving straight line method. Every year it is constant. Second year also 9,000. Third year also 9,000. That is straight line. So for the 10 year, you are providing 9,000 each. So total depreciation you are providing for 10 year is 90,000. So why I have gone wrong is there you have to divide with the 10 also, because total 10 year you have provided 90,000 over a period of 10 year, isn't it? So
Yes,
this means yes. So
10
divide by 10, then you will get 9%. Okay. Similarly, you can calculate the average depreciation written down value also. There is no issue. You will be given an original cost. Suppose original cost is 1 lakh. And for say 3-year depreciation, you have provided say 33,000, something like that. What is the average rate of depreciation? How do you calculate? For 1 lakh, you have provided for 3-year depreciation is 33,000. So per year depreciation is divided by 3, say 11,000. So how do you calculate? Then for 1 lakh, you have provided 11,000. Then for 100, how much? Calculate. You will get the rate of depreciation in written down also. Whether you got it?
Sir, excuse me, sir. Sir, one thing, like how we'll come to know whether SLM or WDB, like because in question number 23, that's slide 23, it was written, and then there it was
Tell me,
mentioned.
please read the question.
Yeah,
Please
sir.
read the question.
Yeah. Purchased a second hand machinery for rupees 1 lakh on 1st April 2017 and spent rupees 20,000 on overhauling and installation.
Okay.
Depreciation is computed at the rate of 10% on original cost.
What is the meaning? See, in the examiner will not give you everything. They will not give the food in the spoon. Please eat.
Yes,
No.
sir. Yes,
See,
sir.
what is the meaning? You have to understand. See, they will give indirectly. They will keep the food somewhere. You have to go and search it and eat. That is the thing. Here it is given, the depreciation is calculated at 10% on original cost. Can you understand what is the meaning of that?
SLM.
Yes, sir. It is
SLM.
because on the original calculated on the original.
If it is given that the depreciation is calculated at 10% on book value, what is the form?
Okay.
Or the depreciation is calculated at 10% on written down value. How do you calculate? Or which is the method then? So it is written down. So you have to read the question patiently and understand what is given there. Sometimes they will straight away give straight line method written down. In the exercise, the case study which we have discussed in the morning, they have mentioned the straight line and written down. And in some cases, they may not give it. But you have to read it and understand which is the method. Right?
Sir, in
Yes,
Macmillan book, for rate of depreciation, there is a formula, sir.
Not clear. Look, I will give an example. Take the case of, I think one I have given for rate of depreciation also. I don't know which question it is.
Sir, can you please solve Macmillan book last problem? Last page, last problem.
Which one?
Macmillan book last problem.
Macmillan book.
Yes, sir.
I don't have that book with me.
Okay,
Can
sir.
you?
I will
read
tell the. Okay.
You share the question or tell me.
Cost is 1,20,000.
Or 1 second. Cost is 1,20,000. Okay.
Salvage value 30,000 for 6 years.
Useful life 6 years. Okay.
Find the amount of depreciation for each year by straight line and WDV. Written down value.
For a written down value method, they have given the percentage
15%.
You should give me that, no?
Okay.
Where is the confusion? You have to answer me.
Yes, sir.
What is
I
the
have
formula?
solved all the problem. But
No. Wait.
Okay.
No. See, tell me, under straight line method, what's the formula?
Okay, sir. 1,20,000 minus 30,000 by 6. 90,000.
Yes.
15,000 into 6, 90,000 depreciation value.
Depreciation value 60. What's the question?
Total.
Total. Okay.
Next, next he is calculating diminishing value for 20.64%. Not 15%.
Which question you are referring to? whether the one which we have discussed in the morning, or you are referring to the question on the Macmillan text.
Macmillan text, sir.
Macmillan text, how it is 20.64 they have given?
That's why sir, I don't understand. He's giving a formula, rate of depreciation is equal to 1 minus S by C whole power 1 by
And
N.
that formula, you can use that formula, but that is not required. Here, see, you can go by the formula which I had given to you. So here, see, you can use the formula for book value. If you want the, what is the question? Average rate of depreciation, isn't it? What's the question?
Yes, sir. Yes, sir. Average
Rate of depreciation. Either you can go by that formula, or what I suggest you, what is the, in this case, written down value method, you have to calculate original cost is 120, and the percentage is 15%.
We can calculate directly.
Yes, average rate of depreciation for how many years? 6 years.
6 years.
6 years. Okay. So you use the formula A is equal to P into 1 minus R the whole raised to n. So this you will get 120. Please fast tell me the answer. 1 minus 0.15
45,258
raised to 6. This you are getting as means 120 into 0.85 raised to 6. How much you got?
45,258.
45257.
How much?
45,258.
45,258. So this is the depreciate. This is the book value. Am I correct? This is the book value at the end of
Yes, sir.
6 years. So can you tell me the depreciation amount up to 6 years?
6 years.
How do you calculate the depreciation amount? This
Total,
is
total cost minus book value.
yes, 120 minus
77,742.
45,258. You are getting it as 70.
74,
74.
74,
74, 42.
742. Okay, isn't it? So 74,742 is the total depreciation you have provided for 6 years. So what is per year depreciation divided by 6?
457.
How much? 12?
12,457.
457.
457.
So you calculate the rate of depreciation for 120. For 120, you have given a depreciation of 12,457.
10.38.
10.38.
Whether you are getting the same answer?
10.38.
10.38. This is the average rate of depreciation.
Okay, sir. Thank you.
Clear?
Yes, sir.
So you need not by heart all the formulas. That's why I have not given that formula. This is the method.
I didn't by heart, sir. I didn't understand from afternoon onwards. Why 20.64?
20.64 is wrong. It is 10.38. Okay.
Okay, sir.
Sir, can you repeat
written down
once
value method?
Pardon?
Sir, for
Sir, can you
written
repeat
down-
once again, sir? Please.
Sir, please go to the capital gain problem, sir.
Wait. I'll
Sir,
repeat.
can you
Take only-
explain once
please,
again?
I'll take only 2 minutes. See here, the question is the cost is 120, and you have to calculate the average rate of depreciation under written down value method. So what you have to do? Well, you have to find out what is the total depreciation you have provided under written down value method up to 6 years. For that, you can use the formula A is equal to P into 1 minus R the whole raised to n. You simplify, you go to the value as 45,258. And what is this 45,258? This is the book value at the end of 6th year. So from this, can you find out what is the total depreciation provided under written down value method? The cost is 120. The amount book value now is 45,000 and odd. So you subtract, you got it as 74,742. So 74,742 is the total amount of depreciation this particular case has been provided for a period of 6 years. So you calculate what is the average per year, what is the rate of depreciation? 74,742 by 6. You got it as 12,457. So every year, the depreciation amount provided average is 12,457. And this is on what? This is for 120. So for 1,20,000, the depreciation is 12,457. What is for 100 rupees? 12,457 into 100 by 120. You will get the average rate of depreciation as 10.38. We'll move on to, yes.
Sir, just
for straight line method, 15,000 by 1,20,000, sir.
Straight line method.
Rate of interest.
Straight line method.
Yes.
For straight line method, you have provided, it is 6 year, every year you have provided 15,000. So total depreciation you have provided, or you take 15,000. 15,000
yes, 15,000 by 1,20,000.
Yes, 15,000 by 120 into 100. This will give you the average depreciation under straight line method.
12.5, sir.
Yes,
for written down value method, for each year, the depreciation amount will be different, right? So the average, we can divide it by 6. Like depreciation amount will be different every year for written down value method. But we have taken average divided by 6 now.
Yes, average. See, what is the meaning of average? What is the meaning of average? First year you have provided some amount. Second year you have provided a lesser amount. Third year you have provided another amount. So what is the average? How do you calculate the average?
Total by number of years.
Yes, that's
so we can take it like that.
Yeah, like that also. Yes, that only we have done.
No, but for each year it will be different, no, sir.
Straight line method, it is same. Written down value method, it is different. Each year it is different. So, but that is the amount of depreciation provided every year. Here the question is, what is the average? How do you calculate average? There are 10 students. One person mark is 48, another scored 30, another scored 80, and all the 10 marks are there. How do you calculate the average mark? You sum it up, divide with 10. Similarly, here the total depreciation provided for 6 years, it is there. So what is average depreciation? You got the average depreciation. That is the average amount of depreciation. If you want in percentage, you have to calculate, use the formula. Total amount divided by original cost into 100. Okay. Now credit card. Credit card, what is your confusion? See, let me explain once again. Here there are two dates which are very, very important. In credit card, number one, the billing cycle. And number two, the due date. So these are all the two important points to remember. And from bank to bank, the billing cycle may change. But in most of the cases, the billing cycle is from 11th to 10th of next month. And the billing date will be 10th. In this case, the billing date will be 10th. Suppose the billing date is 5th of every month. In this case, what will be the billing cycle? The billing cycle will be from 6th to 5th. That's all. So billing cycle is clear. So in this billing cycle, suppose the billing cycle is 11th to 10th of next month. See, suppose this is 11th of January to 10th of February. So what are purchases will be included in this bill? All purchases made from 11th January up to 10th February will be included in this bill. And they will send you the bill to the card holder. And there will be a breathing time for making the payment. And generally, it is 20 days. Generally, it is 20 days. So if 10th is the billing date, and this 20 days is the interest-free period, we call this is the interest-free period. So this interest-free period is 20, means the due date will be 30th. In the case of February, it is 28 only. So it will extend to 2nd March. If it is some other month, January, if it is December, it will be then at 30th of January. Okay. So that is the due date. Now, another point is interest-free period. Here, remember, this interest-free period is applicable to only those credit card holders who had made the payment of the previous bill in full. Make it very clear, they have paid the bill in full. Suppose a bill amount on a particular billing cycle is 20,000. And if he had paid the entire dues, then he is eligible for interest-free for subsequent purchase. But suppose out of this 20, he had paid only 18,000, means he had paid a part payment. Then he is not eligible for this interest-free period for the subsequent purchase also. Am I clear?
Yes, sir.
Yes,
Sir,
sir.
you mean
sir.
that that interest will be calculated for 20 days also? They won't pay for full amount due?
If one pay a full amount on due date or before due date, he will get the interest-free period for next purchase. But he had paid only a part amount, he is not eligible for the interest-free period.
Sir, the interest-free period is only not eligible only for the subsequent month or continuously all subsequent month, all every subsequent month.
Every subsequent month until he clear the entire dues.
Okay.
Once he cleared the entire dues, then subsequent purchase is eligible for interest-free period.
Sir, interest will be charged on remaining 2,000 and subsequent purchase, no, sir?
2,000 from the original purchase, date of purchase, and for the subsequent purchase also interest will be charged. We have did two exercises. We did two or three.
Sir, minimum 10% bill amount in the due amount in a minimum 10% ഓരോ മന്തിലും പേ ചെയ്യുക അങ്ങനെ ഒരു ഇത് പറഞ്ഞിട്ടുണ്ടാ മനസ്സിലായില്ല.
Yes. You see, sometimes they ask the question. It's a very simple concept. Minimum amount due. I think somebody also raised it in the group. MAD. I didn't understand what is MAD. Minimum amount due. See, minimum amount due as per the guideline. Now it is 5%. 1 second.
5% is 250.
Outstanding balance.
5%, yes. A minimum amount due is 5% of bill amount or rupees 250, whichever is higher. Whichever is higher. Is it clear? Bill amount, 5% of the bill amount or 250, whichever is higher. I will give an example. Suppose the bill amount is 10,000. What is the minimum amount in this case?
500.
It is 5%, means 500.
5%, 500.
500. Now, suppose the bill amount is 500. What is the minimum amount?
250.
5% of it is 225, but whichever is higher, you have to pay 250. Now, suppose the bill amount is 200. What is the minimum amount to be paid?
Total 200, sir. 200.
Yes, it is 200. The morning session also, one of the participants said, very difficult to understand.
250 na maximum.
They need not pay 250. See, if that's what, see, there are two guidelines I have given you. Minimum amount due is 5% of the bill amount or 250, whichever is higher. And then if the bill amount is less than 250, if the bill amount, repeat, if the bill amount is less than 250, you have to pay the entire amount. That's what, if the bill amount is 100 rupees or 150 or 200 and 249 or even 250, you have to pay 250. If it is 200, 200. If it is 100, you have to pay 100. You need not pay 250 because the amount due is only 100. Why should you pay 250?
Or if it is 200,
You told whichever higher,
credit card.
whichever higher.
Whichever is higher,
Whichever is higher means.
whichever is higher is applicable only if the bill amount exceeds 250. I have given another option. If the bill amount is less than 250, the actual bill amount has to be paid. Why confusion? I given in the guideline very clearly. I given. I suppose. You want me to open that PPT?
Yes, sir, please
No, sir.
Yes, sir.
So, am I clear? This concept is clear amount because question asked.
Yes, sir. Yes, sir.
Yes, sir. Yes, sir.
Sir, one doubt, sir.
We have to take 500, sir. So we have to take 500, sir, for minimum amount due.
Please mute. I'm not getting you. Can you repeat once again?
For 10,000, we have to take 5% of 500. So minimum
500. 5%. Yes, 500. Okay.
We have to take 500, na sir?
Yes. Whichever is higher. See, 5% is 5% of 10,000 is 500.
500.
Next is 250. Which is higher?
500 is higher.
You have to pay
Then whichever is higher, then if it is 200, we have to take 250, sir.
No. See, that's what subsequent line has given you. If
Then
the
why
bill
there is
amount,
a
if the bill
then
amount,
why there is a line whichever is higher, sir?
my dear, please understand. See, an amount due is 200. Why should you pay 250? So the bill amount is only 200.
200 has to pay, no? That's all.
To pay only 200. Apply the logic. Don't buy hard. What I have given, if the one option is 5% or 250, whichever is higher. Subsequently, I have given you, if the bill amount is less than 250, actual amount has to be paid. I think it's clear.
Whichever is higher means anytime
Again, you are
calculate
telling
higher
whichever
value,
is
sir.
higher. But whichever is higher is applicable for what?
Give him
if
the
we find
example
minimum due.
suits it,
The
sir.
bill amount is
Say
above
bill amount is
250.
1000.
Yes.
1000, then we need not pay, we should not pay 50, we should pay 250.
250.
That he's asking why that condition is there. If it is 1000 rupees, then we should not pay 50. We should pay 250. That's that condition.
1000 means 5. See, understand the concept. There are two situations. Number one, if the bill amount is above 250 or the bill amount is below, I'll give you like that. You write down. There are two situations.
5% on outstanding bill amount or 5% on balance bill amount, sir. In case the bill amount is 10,000, they paid partially 2,000 means now outstanding is 8,000 only. So 5% on
outstanding 5%.
Okay.
No. See, this outstanding 8,000 is there. Now the subsequent bill, they will include this 8,000 with interest. So the next bill amount will be not 8,000. It will be with interest. So you have to wait for the next bill amount. See, first bill amount 10,000. You paid 2,000. That is far above the minimum amount. So your card is active. You don't bother. You can go on purchase. And subsequent bill will come in the next month. Next month, you look at the bill amount. If the bill amount, how much, what is the bill amount? If the bill amount is above than 250, more than 250, you take 5% and 250, which is higher, pay it. If it is less than 250, pay that amount. I'm stopping. No more doubt on this. No more. Very sorry.
പക്ഷെ നമ്മള് ഈ പാർഷ്യലായിട്ട് അടയ്ക്കുന്നുണ്ട് നമുക്ക് അങ്ങനെ അത് വരത്തില്ലല്ലോ ഈ ഇൻട്രസ്റ്റ് റേറ്റ് 5% പിന്നെ നിൽക്കും അപ്പം.
No. See, why? See, interest free is applicable only if you have paid it in full. If the minimum amount is paid, you are not eligible for interest free.
Okay, sir. മനസ്സിലായി.
Is it clear? Sir, the interest free period is eligible only if you have paid the previous bill amount in full. If you have paid a minimum amount or you have paid something more or there is a part amount unpaid, you are not eligible. Whether you paid it or not, you are not eligible. This interest free period is available only if you have paid the bill amount in full.
Sir, one doubt,
in
sir.
full, either on due date or before due date.
Sir, one doubt, sir. If the billing date is 10th February and the person purchased on 10th February and he is not entitled for the free interest period, then he is to pay the amount purchased on 10th February, the full month interest is required to pay, sir?
Yes. See, your doubt is 10th February, a purchase has been made for 10,000 rupees. Okay. And the billing date, the due date, when is the due date? The billing date?
Billing date is 10th February, sir.
Billing date is 10th February. He had purchased this 10,000. Whether this 10,000 is included in that bill? See, morning also there was a doubt.
Yes,
some
sir.
bank,
Yes, sir.
It is included. Okay, this is included in the bill. And so here, so previous, there is no outstanding in this customer. Entire amount has been paid. Am I correct?
No, sir. He is not entitled to the free. He is only paid minimum.
Okay. That means there is some outstanding previous billing. Some amount is left as unpaid. Am I correct? Okay.
Yes, sir.
പുള്ളി ചോദിക്കുന്ന അന്ന് ഒരു ദിവസത്തേക്ക് ഇൻട്രസ്റ്റ് വരുമെന്നാണ്. ഒരു ദിവസത്തേക്ക് ഇൻട്രസ്റ്റ് വരത്തില്ലല്ലോ, അത്രയും പറഞ്ഞാൽ മതി.
No. He had made a purchase on 10th February. If he paid 10th February, no interest will come. But see, here the case is.
ഞാൻ ചോദിച്ചതല്ല, ഒരാള് കഴിഞ്ഞ ബില്ലിൽ മിനിമം എമൗണ്ട് ഡ്യൂ ആണ് പേ ചെയ്തേക്കുന്നത്. അയാൾക്ക് ഇൻട്രസ്റ്റ് ഫ്രീ ആയിട്ടുള്ള ഇതിപ്പോ എൻഡറ്റഡ് അല്ല. അയാള് ഈ 10th ഫെബ്രുവരിക്ക് വാങ്ങിക്കുവാണ്, ബില്ലിംഗ് ഡേറ്റിന്റെ അന്ന് വാങ്ങിക്കുവാണ്, ആ എമൗണ്ട് ബില്ലിൽ ഇൻക്ലൂഡഡ് ആയി. അയാൾക്ക് എൻറ്റയർ മന്തിന്റെ ഇൻട്രസ്റ്റ് കൊടുക്കേണ്ടി വരും എന്നുള്ളതാണ്.
ഈ 10th entire month കൊടുക്കണ്ട. See, now this he has purchased on 10th February, and the interest will be calculated. If that is included, that one day interest you mean? One day interest they may have to. Yes, you have to pay. One day interest you have to pay.
Sir, minimum amount due on outstanding amount, no?
Minimum amount and outstanding are different. See, outstanding is 20,000. This is the bill amount. Minimum amount means 5% of this.
Sir, in IBS material, 142 page, one question is that he made purchase 1.50 lakhs during July 2019. Of which he paid 1.2 lakh being part of the outstanding amount. Then what is the minimum amount due in this case?
See, 150 he paid. Minimum amount for which bill? Which bill?
He made purchase 1.5 lakh during July.
July, okay.
Which he paid 1.20 lakh being part of the outstanding amount.
And in July?
In July. On 11 August, he made additional purchase of 70,000.
Okay.
Then what is if the 2% per month is the financial charge, then what calculate minimum amount due?
Then they have not given the bill amount, no?
Bill amount, sir, not mentioned. Yeah.
Not mentioned. So that means here 150 minus 120. That means here 30,000.
Sir.
30,000 is the previous bill outstanding. He had made a purchase of 70,000. So total amount is 1 lakh. And 5% of this is coming to
5,000.
5% is coming to
calculate interest, sir.
Interest also. You have to calculate interest also. This for 30,000, you have to calculate interest. For that, you have to find out from which day it is purchased.
No, sir, in 5,000, the answer is 5,000 in IBS books.
5,000. That means they are not taken into interest.
So where the billing amount is not mentioned, then we'll go through outstanding amount.
Yes. You can take the outstanding.
Thank you, sir.
Sir, 11th to 10th ഇതുവരെയുള്ള ഇതിൽ ബില്ലിംഗ് ഡേറ്റിൽ 20 ഡേയ്സ് അതിന് ശേഷമുള്ള പീരീഡ് കഴിയുമ്പോൾ 30th കഴിഞ്ഞ് ഫസ്റ്റ് അല്ലേ സർ ഇത് വരുന്നത്?
No. The same question raised in the morning also. See, I'll explain now. Credit card is so many.
20 days interest free days എന്ന് പറയുമ്പോൾ 20 days കൂടെ കവർ ചെയ്ത് അടുത്ത ദിവസമല്ലേ സർ ബില്ല്?
One second. Say 10th July is the billing date, right?
Okay.
And your bank gives 20 days interest free period. You calculate, so the due date you calculate. Say 10th is the billing date. From 10th onwards, you calculate 20 days.
Sir, 10th ഇതെന്ന് പറഞ്ഞാൽ 10th പർച്ചേസ് ചെയ്യുന്ന ഇതും ആ ബില്ലിൽ
it is included. So you count 20 days from 10th July. When it is 29. So 29th July is the 20th day.
30th, sir.
Yes. No. So 30th will be the due date. Yes. See, I told you 20. Don't get confused. 20 days is the interest-free period. That means the due date is 30th. They have to pay on 30th. From 10 to 29, how many days? Whether it is 19 days or 20 days?
20 days.
20 days.
Yes. So 10 to 29 interest free, 20 days. 30th is the due date. Am I correct?
Yes, sir.
Yes. 10th is included, 30th is excluded because 30th you are making the payment. So from 10th up to 29 is the interest free period. 30th he has to make the payment. I think it's clear.
Solve a problem, sir. Solve a case study.
You want a case study? We did it in the morning. Okay, okay, no
Sir,
issue.
sir, or symbol, I will take hardly 30 seconds. Actually, this interest-free period is counted from the actual date of purchase or from the date of bill.
Date of bill.
Suppose I purchase on the 1st and billing date is on 10th.
Yes, we have given, no, I have given some example.
No, that is what I got confused it just before. Because if it is, I purchased it on 1st and billing date is on 10th, then interest, I am supposed to pay interest only on 29th. Am I right, sir? No.
Just on 29th. No. See, you have made a purchase on 1st of July. Am I right? Your billing date is 10th July. Your due date is 30th July. You are making the payment on 31st July. Whether you have to pay interest or not. This is your question, no?
No, not 31st. Not 31st. Before 30th.
Before 30th, no interest.
No interest. No, okay. Enough.
No interest.
Enough. Right.
Till 30th, no interest, sir.
Okay.
Yes,
okay.
because
okay.
Like
if
that.
you make the payments either on due date or prior to the due date, no interest is payable. That's what we have discussed.
That means 30th July is also no interest will come, right, sir?
Sir, if there is some pending balance is there, then
pending balance is there, then interest will come for this purchase also.
First July.
Make it very clear. See, interest-free period is eligible only if there is no previous bill outstanding. Make it very clear. That means up to the previous month, the entire amount has been cleared. So the bill dated 10th July includes only the purchases made from 11th of June onwards. From 11th June to 10th July, all purchases made outstanding, and that amount is coming in the 10th July bill. But if any amount which you had purchased prior to say 10th of June, which remains unpaid, is not eligible for interest-free period. Clear? Okay.
Clear, sir.
Now, can we go to capital gain?
Capital loan, education loan,
Case study about credit
Yes,
card.
Credit card. You want?
Sir, last amount, sir. At the end.
Credit
Sir,
card.
capital gain is important. Yes, sir, please in the end, sir.
Okay. I will do it in the end. Fine. That will be better, because otherwise others know they can leave. The time is very precious. We'll move on to capital gain. What is meant by capital gain? Capital gain refers to the gain enjoyed by a person on sale of a capital asset. See, a person has acquired a capital asset, and he hold it for some time. And after some time, he sell it off. He got a gain. This is called a capital gain. So remember, capital gain applies only when they sell a capital property, a capital asset. What are the capital assets? It can be a landed property. It can be a security, isn't it? So anything. And here you can classify this into two. Capital gain, you can classify into two. One is short-term capital gain. Another is long-term capital gain. Now, any security, generally, you are holding for a period of less than 36 months, comes under short-term capital gain. And if the asset is held by the person more than 36 months, that comes under long-term capital gain. So less than 36 months, short-term, more than or equal to 36 months, it is coming under long-term. But there are certain exemptions. What are the exemptions? In the case of securities, what are the securities? Securities you can classify into two. One is listed, another is unlisted. What is meant by listed, or what are the securities? You can have bond, shares, or debenture, or shares. So these are all the securities. So if it is a listed security, means this particular bond or share or debenture is tradable in the stock market, that its price is listed in the stock exchange. That is a listed security. In the case of a listed security, there is a change. It is less than 12 months. If it is unlisted, it is less than 24 months. And more than 12 months long term, more than or equal to 24 months long term. So this is one exemption. Next is on real estate, landed property. If it is held less than 24 months, it is short term. It is more than 24 months, it is long term. I think it's clear. So this is the short term and long term. How do you?
Third one,
What is that?
please, 1 second, sir.
Pardon?
Third one, sir, please, 1 second.
What is that RE, sir?
Real estate, landed property, house or landed property.
Real
If you
estate
are-
and non-listed less than 24 months.
24 months.
Sir.
Less than 24 months, short term. More than or equal to 24 months, they are holding it. It is coming under long term capital gain. So listed and unlisted. Listed means that it is listed in the stock exchange, major companies share. If it is not listed, that has got a little more time, 24 months under short term, and more than or equal 24 months long term. Okay.
How
Now,
do you know, sir, listed or unlisted?
listed and unlisted.
First, 36 months is debt funds.
Pardon? A debt fund. It is a debt-oriented mutual fund. It is 24 months. Debt-oriented mutual fund. Also, it is 24 months. And let me take that slide.
Gold and jewelry is included in this, sir. Gold and jewelry.
36 months. It is not coming in any of this. All other assets, it comes under 36 months.
Okay. Okay. Thank you.
All other asset, only the exemption has been given for these securities. All other securities, it is less than and more than.
So it's 6 months, sir, for gold loan? For gold?
No, 36 months.
Okay.
36 months. All other securities, it is 36 months. Debt-oriented fund, let me take that PPT. 1 second, let it open.
Sir, sorry to interrupt, but what is the margin money for vehicle loans, sir, second hand? It is not given, sir, everywhere clear, sir. Please.
Individual banks, it is, I think it varies.
25 to 30%.
Yes, it varies. I don't think such question will ask because from bank to bank, it varies.
Okay, sir. Thank you. Thank you.
The average, it will be 25 to 30% second hand vehicle, isn't it? 25 to 30 or 15, depends on various bank competitiveness. Yes.
Okay, thank you.
See, short-term debt-oriented mutual fund, 36 months. Debt-oriented mutual fund, it is 36 months. Equity-oriented mutual fund or unit trust, it is 12 months. Debt-oriented mutual fund, more than 36 months, coming under capital gain, short and long term. Unlisted stock, 12 months. Unlisted listed stock, 12 months, less than 12 months. Unlisted stock, less than 24 months. Real estate, less than 24 months. In the right side, it is equal also is there. So unlisted share, if it is more than or equal to 12 months, it comes under long term. And this is the percentage also. Look at an example. This is an example. Minus it. A house property was purchased in the financial year 2011-12 for a price of 50 lakh. It was sold in the year 1920 for 85 lakhs. Find the capital gain tax in this transaction. Here, a CII for financial year 11-12 is given. CII for financial year 19-20 is given. What is meant by CII? CII stands for Capital Inflation Index. So this property is purchased in the year 11-12. So the 11-12 financial year means from 1st April 2011 to 31st March 2012. During that period, this property has been purchased. Now this is sold in the year 1920. So in any case, it is more than 2 years. So definitely it comes under long-term capital gain. Fine. Now you have to calculate what is the capital gain tax in this case. So here, what you have to do, you have to look at the two indexes. One, the index at the time of purchase, the year in which the property is purchased and the year in which the property is sold. The year in which the property is purchased is 1112, and 1112, the index is capital inflation index is 184, and the year in which it is sold is 289. CA is 289. So how do you now? You have to, even though the property has been purchased for 50 lakh in 1112, you have to calculate the inflation indexed purchase price. How do you calculate? Numerator, you write the CA of the year of sale. Denominator, you write the CA of the year of purchase. So CA for year of sale is 289 and the CA for year of purchase is 184. So 50 lakh into 289 by 184. That gives you 78,53,261. So this is the inflation indexed purchase price.
What it means, sir, actually, what inflation indexed purchase price means?
Inflation index, see, you have a person had spent 50 lakh in the year 2011-12. What would have been its price, this 50 lakh now, as per the inflation? That is the inflation indexed purchase price.
Okay, sir.
Okay. So taking into account the inflation, because money value has come down. So the 50 lakh they have spent on that day will be something more, isn't it? So straight away, you cannot calculate the capital gain as 85 minus 50, 30, 35. That is a wrong phenomenon.
Sir, once more, sir.
Yes, sir. Yes, sir.
Sir, once more, sir. I didn't get, sir. Once more. Same.
50 lakh has been sent. 50 lakh has been spent in the year 2011. Taking into account the inflation for all the year from 11 to 19, what would have been its price? 50 lakh, loading the inflation, what will be the price? For that, you have to look into the two inflation index. Purchase year inflation index, sale year inflation.
Sale year inflation.
Yes, you write on the numerator the CA for the sale year, denominator you write for the purchase year. So 289 by 184, that is the ratio. You multiply with 50 lakh, you got it as 78,53,261. So this is the taking into account the inflation, the purchase price would be somewhere 78,53,261. Fine, you sold it in 1920 for 80.
How we can get 20% capital gain tax?
It is 20%. Capital gain tax is 20%. That is every year the government will announce what is the capital gain tax. At the present rate, it is 20%. You look at your income tax.
What is default amount?
Pardon?
It is default percentage.
Now it is 20%.
20 is for
capital gain tax is 20%.
20% on capital gain. See, just like income tax, government is announcing every year, no? Now, after some time, suppose the government feels that the tax is less, they can increase it. That is left to the government. In fiscal policy, they will announce. So,
sorry to interrupt. Please continue the question, sir. Continuity is going.
Yes. I'll continue. Therefore, the long-term capital gain is the difference between the sale price and the inflation indexed purchase price. So 85 lakh minus 78,53,261, you are getting it as 6,46,739. So this is the capital gain. And as a person, as per government guideline, income tax rule, a person who has acquired some capital gain, they have to pay income tax. They have to pay, sorry, not income tax, they have to pay capital gain tax, isn't it? And here the capital gain tax for long-term capital gain is 20%. So 20% of 646 coming to 1,29,348. So they have to pay capital gain tax of 1,29,348 in this particular transaction. Any doubt?
Sir, for short term, what is the tax rate? Short term
I
capital.
told you in the slab. For short term, sale of securities and equities, it's 15%. And for all other, it is as per the income tax slab.
Sir, okay.
You calculate your income for a particular period, and this amount you add to it, and which slab it comes under, maybe under 10% or 15, 20%, that slab or 30%, that slab will applicable.
So
Okay.
sale of securities, you have,
Yes,
sale of securities, you have written
sale of
10%,
securities,
sir.
it is 10% of the amount exceeding 1 lakh. And for all others, it's 20%. Sale of securities or equities, it is 10% of the amount exceeding 1 lakh. Up to 1 lakh, there is no long-term tax.
So, sir, amount exceeding 1 lakh means whatever is above 1 lakh will be charged 10%
No.
of the total
Amount exceeding 1 lakh, yes, 10%. 10% on amount exceeding 1 lakh.
That means if it is 1,50,000, the interest will be on that 50,000.
Not interest, tax.
I mean, tax will be on 50,000.
50,000. Case to
Sir,
decision.
For the examination, we memorized the slab of it, or every
Capital
year
gain,
the
probably
slab.
they will give, but now for all other securities, you can take it 20%. Sometimes they will give it. Look at this question. I think they have not given. X inherited a residential property of value 60 lakh from his father on 2810. His father purchased the said property on 10/11/2001 for 20 lakh. He sold the property for 80 lakh in March 2021. Find the capital gain tax in this transaction. The CA for 2001-2 is 100. CA for 10/11 is 167. CA for 2021 is 301. Here you may have a confusion. First, you should decide whether it is long-term or short-term. Definitely, it is long-term.
Long-term.
Now, long-term, okay, because it is more than 3 years, or more than 2 years. Now, here, one point to remember, X inherited the property in the year 2010. So, the date of purchase, can we take it as 2010? No. See, here, the capital gain will arise only when a person disposes of the property. Here, he has inherited from his father. So that is, that property has become, he became the owner, but he has not disposed it of. So this date 28/10/2010 has no relevance for computing capital gain. Got it? Because capital gain arises only when a person sells a capital asset. Here, the inheritance means he has not sold it. That he became the owner because his father gifted him. So he got the property. He is holding it. He sold it in 2021. So the year of sale is 2021. And the year of purchase, his father purchased the property in 2001. So the year of purchase is 2001. And purchase price is 20 lakh. You have to calculate the inflation indexed purchase price by taking the CAIIB for the year of purchase and CAIIB for the year of sale. Okay, so CAIIB for the year of sale is 301 and CAIIB for the year of purchase is 100. So 301 by 100 is the factor. You multiply this with 20 lakh. You got it as 60 lakh 20,000. So the inflation indexed purchase price is 60 lakh 20,000 and the sale price is 80 lakh. So what is the gain? Capital gain is 80 minus 60 lakh 20,000. 19 lakh 80,000 is the long-term capital gain. Calculate tax at 20%. It is coming to 3 lakh 96,000.
So why inflation index purchase financial year 2021?
Why 2021 is taken? Because
Yes,
he had sold the property on 10th of December, on March 2021. So which financial year it comes? See the date of sale. Look at the date of sale. It is March 2021. See in which financial year it is coming? March 2021?
Last one, 300.
No. Tell me the financial year. Financial year 2021. Am I correct? Financial year 2020 to 2021. And the capital gain index, capital inflation index for 2021 is 301. So that you have taken on the numerator. Denominator, the index for the year of purchase. Year of purchase is 2001-2. That time the CA is 100. So 301 by 100 into the purchase price.
Sir, in this concept, the highest level of difficulty in asking this question is only up to this level, sir? Or where any other difficulty level is there?
Look at the second question, third case study. So the previous two, we have discussed about landed property. Now this is on equity. A person purchased 1,000 shares of a company at 25 rupees on 1/3 2018. Another 1,000 shares of the same company at 40 rupees on 2019. Another 2,000 at the rate of 50 rupees per share on 2020. He sold 2,500 shares at 60 rupees on 36/2020. Compute the capital gain in this transaction. A person purchased a share. This is shares of a listed company that is there. It is a listed company. I think I omitted it. It's a listed company. You can treat it as a listed company, because share trading will be doing only in respect of listed companies. So the shares of listed company. So here there are 3 lots of purchase, isn't it? First lot, 1,000 share. Second lot, 1,000 share. And third lot, 1,000 share. So aggregate, no, 1,000 plus 1,000 plus 2,000. So total shareholding is having 4,000 shares. Am I correct?
Yes,
out
sir.
of this, he sold 2,500 shares. So how do you appropriate? Let me use the whiteboard. Am you require?
Yes, sir.
Yes, sir.
Okay, I'll take the whiteboard. See, the first lot of 1,000 share he has purchased in. Where is the question? Can you read it? 1,000 shares?
1318, sir.
2018.
13/2008. 13/2008. At what rate? 25 rupees.
25.
25 rupees.
Yes. How 1,000? Then another lot of 1,000 at
1/12/2019, 40 rupees.
1/12/2019. And another 2,000?
1/4/2020, 50 rupees.
50 rupees. And these are the purchases made. And he sold on which date? Sold on which date?
36/20/21.
Yes. 36/20/21. How much he sold? 2,500, isn't it? At what rate? At 60 rupees. Now, which under whether this is the short-term capital gain or long-term capital gain? Listed security, if it is less than 12 months, short-term. If it is more than 12 months, long-term.
Short, long-term.
Long term.
More than 2.
See, look, wait. The last security he had purchased is 1st April 2020. Now the sale has been done in June 2020. You calculate from April 20 to June 2021 whether it exceeds 12 months or less than.
Exceeds 12 months.
So here it is long term. So here it is long term capital gain. Fine. Now another point is, see, he had purchased 1,000 here, 1,000 here, another 2,000. Then he sold 2,500. How you account? Whether you can take this 2,500 from this? No. Here the rule
First in, first out.
Yes, FIFO rule will apply. That means this 1,000 plus this 1,000 plus out of this 500. This is making 2,500. Am I correct?
Yes, sir.
Now, what is the purchase price of this 1,000 share? 25 into 1,000, 25,000 rupees. And this is 40 means 40,000 rupees. And this is 50 means 50,000. He sold this 2,500 at 60. That means
that is 25,000, no?
So it's 500 cents, not
500
1,000.
into 15, sir. 25,000 a year.
500 into 50. 500 into 50.
25,000.
25,000. Sorry. Not 50,000. 25,000. I'll correct it. This is 25,000. Now you have to calculate the inflation indexed purchase price of this 25,000. How do you calculate? This is purchased in the year March 18. So which financial year it is? March 18 comes under
17,
18. And what is the inflation index for 17-18? It is given. Inflation index
272.
272. And this 36, it is sold. Which financial year it is?
21-22.
21-22. And what is the index for 21-22?
370.
317 now. How much?
317.
317. Okay, 317. So numerator, what will come? So it is 25,000 into 317 divided by
272.
272. Yes. Now to get the inflation index to purchase price of 40,000, you have to multiply 40,000 into numerator 317, numerator as a denominator 19. December 19 comes under which financial year? 1920. And what is the index?
289.
289. This you calculate. And the next 25,000 into numerator 317, because year of sale is 21-22 and year of purchase is 1420. 1420 comes under 2021. 2021 is 301.
22.
301.
301. Yes. You calculate these three.
Sir, in case if short-term capital gain was used instead of long-term capital gain, then what will be the changes in the steps?
You need not calculate this inflation index.
Okay, sir.
It is not required. Because listed share means 12 months. You need not, you can just take the sale price and subtract. Inflation index will apply only for long-term capital gain. So you add it, how much you are getting it? When you add it, now you can simplify it, isn't it? Can you tell me or let me go to the slide. Okay.
Yes, sir.
To save the time, that will be easy.
So for determining whether it's short term or long term, we need to always look into the date at which the share was purchased last.
Period of holding. If it is, yes, period of holding. When it is purchased, when it is sold. If it is less than 12 months, short term. If it is either 12 months or more than 12 months, it is long term.
So in this case, because everything was greater than 12 months, so we took it as long term.
Long term.
So had it been whether if the 500 number of shares been purchased less than 12 months, in that case,
the treatment is different. Treatment is different.
So there is a 6 months.
6 months.
There is a period only of 6 months for purchase of second one and third one, sir.
6 months only. Second and third one.
Yes,
right? Sir. What's the second one? Second, they have purchased on
December 1, 2019.
December 2019. Sold on?
Sold. Okay. You should not.
2021.
Okay, sir. Thank you.
So the inflation indexed price of the first share is 29,136. For the second lot, it is 43,875. And for the third lot, it is
26,329.
26,329.
Now you add all the three and subtract it from the sale price. You will get the capital gain. Total capital gain as 50,660. Can we go to the next one?
Price means 60 into the 2,500. No, sir?
Here sale price.
60 into 2,500.
Total 16,500. That is the total amount.
Sale price.
Sale price.
Right. Okay.
I have done it each. I have done for the first lot 60 into 1,000, 60,000. Then I have calculated the long-term capital gain for that. You need not. You calculate the inflation indexed purchase price of all the three lots, add it, you subtract it from 60,000, not 60,000, 150, isn't it? 2,500 into 60, that means 1,50,000. You subtract from 1,50,000. Am I correct?
If one more question is there, total capital gain tax we have to.
No, here it is only capital gain has been given. Here capital gain tax they have not asked. Capital gain tax in this case, it is a long term. You can calculate. If it is list of shares, what is the guideline? What is the guideline?
10%.
The guideline is in the case of long-term capital gain, if the gain amount, the capital gain amount exceeds 1 lakh, then only 10%. But here it doesn't exceed 10%. So you need not pay capital gain tax in this case.
Okay, thank you, sir.
Sales is on 5 lot of shares is 30,000.
Sir, there in third one, sir.
Third lot, 500 shares sold at 60 rupees. So the sale price is 30,000. And inflation indexed purchase price is 26,329. So the capital gain is 30 minus 26,329, 3671. I have added all the three. I have calculated the capital gain in each case, added it.
If it is less than 10, we should take 20%. If it is greater than 10, greater than 1 lakh, we should take 10.
If it is less than 1 lakh, you need not pay. If it is more than 1 lakh, you can take.
So
10.
that 10% is based on the capital gain or sale?
Capital gain. Capital gain. See, the tax you have to pay on capital gain, not on sale. Always the capital gain tax has to be calculated on the capital gain. How much gain you got. On that you have to pay tax.
Means on the difference amount. That
Yes,
is only gain
difference
we are
amount,
getting.
difference amount.
Sir, when that 10%, 20% will come into the picture, sir?
20% will apply other than these listed shares. Or if you see in the case of shares, securities, it is 10% if the amount exceeds 1 lakh. For all others, that means for say unlisted, say securities it's coming for say mutual fund or gold or real estate.
Percentage of what amount, sir?
20% on the capital gain. Always tax. See, you are having an income. You have to pay tax on what? Income tax on what? Your income. Similarly, capital gain tax has to be paid on capital gain, not on the sale price. Okay.
So here we want to multiply.
Pardon? Here you need not pay. Here you need not pay capital gain tax because the total capital gain is less than 1 lakh. Need not pay tax.
Sir, if in the third
The
case,
final
sir,
difference amount, sir, you're telling about?
50,660.
Since it is below 1 lakh, we need not pay capital gains.
Need not pay tax.
No, even the securities, if we calculate with the CAIIB also, that is also not coming above 1 lakh.
Which one?
The initial 25,000 into 317 by 272. We are calculating the CAIIB, no, the CAIIB. Yes. The CAIIB. Those amounts are also not exceeding 1 lakh.
No, that they can exceed. See, this exceeding means what is the aggregate gain a person has got.
Okay. Irrespective of the
gain, capital gain. The sale price can exceed 1 lakh. But you have to arrive at the gain, you have to subtract the from sale price, you have to purchase the purchase price. Sorry, subtract the purchase price. But here, purchase price you have to link to the inflation. Calculate the purchase price linked to the inflation index and arrive at the inflation indexed purchase price. You subtract this inflation index purchase price from the sale price. You get the capital gain. And if the aggregate capital gain exceeds 1 lakh, you have to pay 10% on that. If the aggregate capital gain is less than 1 lakh, in the case of securities, you need not pay capital gain tax. Okay?
Okay, sir.
Yes, sir.
Sir?
Go ahead.
Sir, if there is any loss,
One at a time. One, please.
sir, if there is any loss in any particular transactions, can we set off it to the while adding? Can we subtract
During that year, you can set off.
Okay.
During that year, a particular financial year, there is an gain, there is a loss. You can set off, and for the net amount, you have to pay capital gain tax.
Can't it be carried over to the next year?
No. Then you have to work out it separately, just like income tax. No, when you are getting an arrears, you have to file a separate statement and other things. Generally, it won't. You have to, because nobody will pay it like that. They will set off it in that year itself. And
Thank you, sir.
There are accounts in bank to save this capital.
No. See, I'm not getting 2 persons that were talking together.
Sir, is there any
One at a time.
Purchase price of third lot of share 500. How can, sir?
See how much shares they have sold. You look at the question. Sometimes suddenly you are rising up and putting a doubt. How many shares he has sold on June 2021?
2,500.
2,500. So this 2,500, I told you from where you have to account. You have to use the principle FIFO. What is FIFO? First in, first out. So first in, first out means this 2,500 share comprises of the first lot of 1,000, second lot of 1,000, and from the third lot of 2,500. Right? Okay.
Sir, ഇവിടെ 20,000 അല്ലേ വരുന്നത് capital gain tax എടുക്കുന്ന സമയത്ത്?
Capital gain tax എടുക്കുന്ന സമയത്ത്
at 20,000 അല്ലേ നമ്മൾ കാൽക്കുലേറ്റ് ചെയ്യേണ്ടത്? മീൻസ് ലെസ് ദാൻ 1 lakh ആവുമ്പോൾ അങ്ങനെയല്ലേ പറയുന്നത്?
What 20? I'm not getting. Where is 20 here?
No, sir. Here capital gain is 50,660.
Fine.
So it is less than 1 lakh.
Yes. No need to pay tax.
അത് മനസ്സിലായില്ല സർ. Tax.
You need not pay tax. Your income, see, income tax slab is 2,50,000. Your income is 2 lakh. You need to pay tax?
No.
Same. So if the capital gain is less than 1 lakh, you need not pay capital gain tax.
Only for listed securities, unlisted
only for listed securities. Only for listed securities.
Real estate case
real estate it doesn't apply. Real estate doesn't apply. You have to pay.
Capital gain
20%. For all others, long-term capital gain is 20%.
Sir, ipo ഏതാണ് short term, ഏതാണ് long term എങ്ങനെ ഐഡന്റിഫൈ ചെയ്യുക?
I think you were sleeping for some time.
No, എനിക്ക് മനസ്സിലായി ഏതാ ഷോർട്ട് ടേം. പക്ഷേ ഇപ്പൊ വേറെ എന്തെങ്കിലും കൊടുത്തു കഴിഞ്ഞാൽ നമുക്ക് ഇതാണോ ഷോർട്ട് ടേം ഇതാണോ ലോങ് ടേമിന്റെ സംശയം വരില്ലേ?
I told you, you look at the holding period of the security or holding, I'll put it generally, holding period of the asset, of the capital asset. Beginning, I told you what are capital assets, your tangible or intangible. That means it can be a landed property, it can be house property, it can be a share, it can be a bond, or it can be a debenture, or it can be a mutual fund. So these are all the capitals. Now, what is the holding period? You acquired on such a one day and you sold it on another day. You count the holding period. If the holding period generally, if the holding period is less than 36 months, it comes under short term. And if it is equal or more than 36 months, it comes under long term. Now, there are some exemptions. What are the exemptions? In the case of listed securities, this 36 is replaced by 12 months. That means in the case of listed securities, it is if the holding period is less than 12 months, it is short term. If it is equal or more than 12 months, it is long term. Now, in the case of unlisted securities or real estate, it is 24 months. That means if the holding period in the case of an unlisted security or real estate is less than 24 months, that comes under short term. If the holding period is equal or more than 24 months, it is long term. Now you take the case of debt-oriented mutual fund. Debt-oriented mutual fund, it is 36 months, less than 36 and more than 36. Less than 36 short term, equal or more than 36 long term. So this is the yardstick to find out whether this particular gain comes under short term or long term. These things, the basic things you should remember. And generally,
Sir, here one small doubt, sir. Sir, in the third case, we are getting 500 shares for 50 rupees. And the date is on 1/4/2020, no, sir?
1/4/2020. 1/4/2020.
The date becomes 36/2020. What should be done?
2020 means it is short term.
Yes, sir. If it becomes short term, rest are becoming in long term, we have to take the actual value as such. Like
Yes. You have to divide into two. Long term separate, short term separately you have to calculate. Okay.
Short term consider.
Short term? Here it is. Sale of securities, short term is 15%. Why you paid 15% is the short term capital gain tax straight away. If the holding is less than 20 months, you arrive at the capital gain, you calculate 15% on, suppose the amount is 20,000, straight away 15% on 20,000, that is the tax. This 1 lakh and exemption 10% comes only for long term. A person is holding a security for a longer period and then he is getting an amount. Short term means within 12 months he is getting a gain. So for that case, he has to pay 15% as capital gain tax.
So the
is there 1 mark question or 5 mark question?
The question.
Sir, the items excluded from this capital gain. Inherited property, probably it may be 10 years of holding, but there is no capital gain. Am I right, sir? At the time of selling, suppose
if there is no increase.
No, I have not purchased it. I got it inherited from my grandfather, like that, and I sold it.
No.
This year, yes.
Yes.
In that
so
case,
when this property has been purchased,
that we don't know because that is inherited from my grandfather to father like that.
Then it doesn't apply.
It won't apply. Okay, right.
Yes. Because see, this capital gain started from 2001. If the property has been purchased prior to that, that doesn't come under this one because there is we don't have inflation index prior to 2001.
No need to take it as a base of 2001.
No, not
right, sir.
So not need to pay tax for that?
No, it will not come. Thanks, because you cannot assess what is a gain in that case, isn't it? Because the year of acquisition is long back, somewhere in 90s. Okay. So next is educational loan, a case study. A very simple one. I'll finish in a few minutes only. Here, the only point you have to remember is how do you fix the caution deposit amount? The caution deposit amount for considering an education loan, you can consider only 10% of the tuition fee. So here, what is the tuition fee? Tuition fee is 5 lakh. 10% on to 5 lakh is 50,000. So whatever be the caution deposit in the application, bank can grant maximum of 50,000 rupees. Okay. Now next is for other expenses. Other than caution deposit, what are the other things? Cost of computer, then cost of books, uniform, equipments, study tour, thesis, project work, everything put together for other expenses, it is 20% on tuition fee. So these are the two broad guidelines you should remember. Caution deposit, 10% of the tuition fee, and all other expense. So here, what are the eligible expense we consider for an education loan? One is tuition fee, next is hostel fee, third is caution deposit, and fourth is all other. So these are the 4 categories. So tuition fee and hostel fee, you can include entire amount. But caution deposit, there is a limit. And other expense also, there is a limit. That is 10% and 20%. So this is the broad guideline in respect of an education loan. I think it's
percent deposit, maximum not.
Maximum?
10% and 20%.
10%, 20%. That is the maximum you can consider. If it is within that, you can give entire. If it is more than that, you can consider only this limit.
So caution deposit 10% low. Other expenses 20%. Sir.
Not on loan. Look, I have given it 10% on the tuition fee. It is linked to the tuition fee.
Sir, if the actual cost of deposit is less than 10%, say 40,000 or 30,000 in this example, we should
you
consider
can, how much you should give as a bank, as a manager, as a banker, you tell me.
Lower amount.
Actual.
Lower amount, that's all.
Okay, thank you, sir.
Sir, for caution deposit 10%, other expense 20%, sir. That is
20% of the loan amount. 20% of the tuition fee.
Tuition fee.
I given it here in the solution. It is given.
Sir, in 1 lakh, you have less the margin of 5%. Why, sir? For this the other expenses.
No. Total put together. Generally, if the loan amount exceeds 7.5 lakh, we charge a margin, isn't it?
5%.
5%. Yes. Varies from bank to bank. You can charge 5% on the loan amount. So total 5 lakh tuition fee, 2 lakh hostel fee, 50,000 caution deposit, and 1 lakh for all other expense. Put together 5 plus 2, 7, 8 lakh 50,000. And out of this 8 lakh 50,000, 5% the applicant has to bring in as margin. That is 42,500. So the loan amount that can be considered is 8 lakh 7,500. And what about security?
If the margin percentage is not mentioned.
Margin percentage, this is IBA formulated scheme. Last year, IBA has formulated an education loan scheme. In that, this is given 5%.
Normally, there is no margin, sir.
Cost of computers are book uniform.
Everything, it is 20%. Other than caution deposit, all other expenses put together should not exceed 20% of the tuition fee.
Sir, cost of computer is separate now.
No.
That we will take full.
No. Cost
Only
of
tuition
computer.
fee and the hostel fee.
Look at the example. Cost of computer, then cost of books, cost of uniform, cost of other equipment, then study tour, thesis, project work, everything put together is 20% of the tuition.
Sir, where cost of computer is included here?
Other expense.
Other expenses is not mentioned here.
Sir, cost of computer is separate here. No?
Cost of computer?
See, look at what is the question. Rahul got an admission in a college. Okay. The expense he had given, tuition fee 5 lakh, hostel fee 2 lakh, caution deposit 1 lakh, cost of computer 50,000, books and uniform 50,000, study tour 1 lakh. This is the data given to you. You're not looking at the question. What is the question? What is the amount of caution deposit that can be considered as part of the loan amount? That is question number 1.
Sir.
So how do you calculate? You look at tuition
10% of the 10%.
10% of 5 lakh is coming to 50,000.
Okay,
he is asking caution deposit 1 lakh. You can grant only 50,000. Fine. Now look at other expense. Look at other expense. Other expense, cost of computer 50,000, books and uniform 50,000, to tour 1 lakh. Put together 2 lakh. How much you can grant? 20% of 5 lakh. How much it is coming?
1 lakh.
So among out of this 2 lakh, you can grant only 1 lakh. So that is the answer. See, here cost of computer is given separately because the applicant had given, I want to purchase a computer, its cost is 50,000. Can you grant a loan? This is the question. Put together, you can grant only 20% of all other expense.
If given value less than this value, we have considered it, sir.
Yes, if it is less than, you can consider. Suppose cost of computer is say 30,000, books and uniform is only 10,000, and the study tour is only 60,000. So all included coming only 90,000. You can grant the entire amount because ceiling is 1 lakh, and this comes to only 90,000. You can grant. We'll move on to another one. This is regarding gross annual value and net annual value of a house property. So this, again, you will be more confusion. Here, there are 2-3 words. One is the municipal value. Another is the fair rent. Another is the standard rent. Then the actual rent and the expected rent. So a question can be asked. I think a previous year they have asked it. Here, what is meant by municipal value? This is applicable only for house property. There is a house property, and the question is, what is the gross annual value? Or what is the net annual value of this house property? How do you calculate? They have given some input. So here, these are all the probable inputs they are giving. One is what is the municipal? What is meant by municipal value? Municipal value is the value determined by the municipal authorities or corporation authorities for levying the tax, the building tax. So that is only for fixing the building tax. Number two, fair rent. What is fair rent? Fair rent is the rent fixed by the government. See, you know, the fair price for land property, each area government fixes a price. Similarly, for rent also, there is a fair rent. Rent that similar property can fetch in the same or similar locality. And what is standard rent? Standard rent is the rent fixed as per the Rent Control Act, or 10% of the cost. That is standard rent. And what is actual rent? Actual amount received as rent. And what is expected rent? The higher of the municipal value or the fair rent. So these are all the terms you should remember. Bit confusing. Look at an example. The municipal value is 10 lakh. Fair rent is 12 lakh. Standard rent is 11 lakh. Actual rent is 12 lakh 50,000. What is the gross annual value? So it is not confusing. If the actual rent is more than any of this, then the gross annual value is the actual rent. So here the actual rent is 1250. Therefore, the gross annual value of the project of the property is 12 lakh 50,000. Now, how do you calculate the net annual value? The net annual value is gross annual value minus municipal tax. Suppose it is given the municipal tax is 10%. How much will be the municipal tax? 10 lakh is the municipal value. 10% on the value fixed by municipal authorities. That means 1 lakh. So 1250 minus 1 lakh, that will be the net annual value in this case. Means 11 lakh 50,000. Is it clear? This a bit confusing. For me also it is confusing. You have to understand the concept. The municipal value means...
So give any example.
This is one example. I'll give another example. This is one example. I'll give another example. This is one example. See, the municipal value is 10 lakh. Fair rent is fixed at 12 lakh. Standard rent is 11. That means for 1 year. This fair rent at 12 lakh means it is for 1 year. That means per month it is 1 lakh. Standard rent is 11 lakh. Actual rent is 1250. So higher of A and B is 12 lakh. Expected rent lower of C and D. That is 11 lakh. So gross annual value.
Actual rent is 11 lakh 50,000. Then what is?
Pardon? Actual rent.
Actual rent is 11 lakh 50,000.
I will show. A table I will give you. Now you look at another example. The municipal value of a house property is 10 lakh. Fair rent is 11 lakh. Standard rent is 12 lakh. Municipal tax paid during the year is 10%. Interest on the loan availed 5 years ago for purchase of property is 50,000 during the year. Find gross annual value, net annual value, amount of deduction under Section 24 of Income Tax Act. First, we have to calculate the gross annual value. Here, gross annual value is the here actual rent is not given. You can take the fair rent as the rent. So gross annual value is 11 lakh. If actual rent is given, then the computation is something different. So gross annual value here is 11 lakh. Net annual value, gross annual value minus municipal tax. What is the municipal tax? Municipal, for assessing municipal tax, municipality that picks up 10% on 10 lakh. 10% on 10 lakh. That is 10% on 10 lakh is coming to 1 lakh. So the NAV is 11 lakh minus 1 lakh, that is 10 lakh. Now, deduction under Section 24. What is the eligibility? The eligibility is just like income tax, there is a standard deduction. Here, there is a standard deduction that is 30% of NAV, right somewhere. The standard deduction in case of income from a house property, it is 30% of NAV plus the home loan, the interest they have taken. And what is the maximum eligibility for a housing loan interest? Now it is 2 lakh. You must be knowing, all of you must be having an housing loan and you will be claiming income tax exemption, isn't it? Now it is maximum 2 lakh. So in this case, 50,000 is the interest for that particular year and 3 lakh is the 30% of NAV. So total exemption is getting 3,50,000. Any doubt?
So standard rent is higher than the fair rent, right? Then why we take
Standard
fair
rent
rent
is
as rent?
standard rent is in this case standard rent is higher than the fair rent. Look at another. I have prepared a table. This will give some more light to you. There are five cases, situations I have given. Fair rent, municipal value, standard rent, actual rent. So these are all the 4 things given. Fair rent, municipal value, standard rent, and actual rent. Now, what is E? Higher of A and B. Higher of fair rent and municipal value. That is coming to 108. Then expected rent, lower of C and D. Standard rent and E. That is coming to 96,000. And gross annual value, higher of D and F. D is actual rent. F is expected rent. Higher is 120. So case 1, 120. Similarly, case 2, 120.
Sir, in exam, ABCD is given, na? EFG
Yes, they will give. ABCD they will give. ABCD they will give.
Sir,
E, F, G, you have to calculate. Okay.
Hello. One question, sir.
First slide, please.
Sir, actual rent is the rent that we are actually receiving.
Actually, we are
Am I
receiving.
right, sir?
Yeah, right. In the look at the case 3. In the third case, the actual rent.
Fair rent. What is the fair?
Fair rent is the rent that is eligible in that particular locality. So just like fair price for a landed property, government fixes. Like that, the fair rent means for a similar building, what is the rent in that area or in a similar area. So that is known as fair rent. Municipal value means it is the value fixed by the municipality for fixing the building tax. Standard rent is the rent fixed by Rent Control Act or by taking into account 10% of the total cost. And actual rent received. I've given, I think, the definition here. Isn't it? Fair rent, standard rent, actual rent. So spend some time on this if time permits. Then if some question asked, you can, because Valithan sir shared a question.
Please, one sec.
Reverse
mortgage. Yes, I am coming to
mortgage, sir.
Okay. Reverse mortgage.
I think that will be the last one.
Yes. Reverse mortgage. First, you should understand the concept before looking into the question. What is happening in a reverse mortgage? Now we look at a mortgage loan. In a housing loan, what you are giving? You are giving a loan to a person to acquire house property or to construct a house. And this loan has to be repaid over a period of time. Fine. So in the case of a mortgage loan, the loan you give abruptly in lump sum or in 1 or 2, 3 installments in stages, and the borrower has to repay it over a period of 5 years, 10 years, 15 years, 20 years, or 25 years. That is mortgage. In the case of reverse mortgage, it is happening the other way. See, the release, the installment, the loan will be released and accumulating the amount, the principal plus interest has to be paid in on loan. That is called, it is reverse mortgage. Are you getting me? So in the case of reverse mortgage, you are releasing the loan amount in installment over a period of 10-15 years. And at the end,
sir, installment means monthly.
Yes, I will come to that. So in installment, it can be monthly, it can be quarterly, it can be half yearly, or it can be yearly also. Now, why does such a situation has come? You must be knowing now. Now, not only in India, in everywhere, the old age people are finding it very difficult to manage their daily routine. Am I correct? Their children must be working abroad or somewhere else, and the old age parents will be living in a palatial house, which they have acquired out of their hard-earned savings. But they don't have enough money to live, to sustain. So this is the situation. So a person may be an old age, means he is above 60 or 65. he is owning a house and the value of the house is 50 lakh or 1 crore, but he doesn't have any money to live in, means for buying this medicine, meeting his treatment expense and for his living expense. So this situation has arisen. So here, government, as per the directions of RBI, they have come out with a loan scheme, and that is called reverse mortgage. And reverse mortgage, see, any senior citizen, if he is owning a house wherein he is living, that house can be mortgaged. And against the security of that house, bank will give a loan. And the loan will be released in installments. And this particular old age person, he need not pay because he doesn't have any income. So he will not repay. Who will repay? Or how the bank will recover the money? At the end, either by sale of this property, or if the legal haste comes, they can clear off the debt and take the possession of the building. This is what is happening in reverse mortgage. Concept is clear?
Yes, sir.
Yes. Now look at, now the situation is Mr. Thomas, a senior citizen, is owning a house worth 100 lakhs. He approached his bank to avail a loan under reverse mortgage to meet his daily medical and living expenditure. As per the loan scheme, bank sanctioned a maximum of 75% of the value of the security. So here, what is the value of the security? 100 lakhs. So how much they will give?
75
lakhs. So the loan amount is 75 lakh. And the interest they are charging is 9%, repayable in 15 years. So this is 9%. 9% means it is monthly compounding. That is understood. So it is monthly compounding. So 9% monthly compounding, repayable in 15 years. Based on this data, what is the monthly installment Thomas is going to get under reverse mortgage? Here, what is this 75 lakh? 75 lakh is the loan amount plus interest accumulated at the end of 15th year. Are you following me? So 75 lakh is the future value. What is the rate? 9%. And number of years? 15. So N is 15 into 12, 180. And R is 9% means 9 by 1200, 0.0075. So you can treat this as an annuity, and the end of the period annuity, you have to calculate the value of A. What is the formula? A is equal to...
Sir, 9 use the EMI formula, sir.
EMI
Sir, 9
formula.
divided by 1200, sir. What is that, sir?
9% interest. 9% interest per annum. And this is payable compounding monthly. So 9% means 9 by 1200. Monthly means you have to divide with 12. For percentage, it is 100. So in EMI also, we are using the same thing. Same thing.
If we use EMI formula, you will get it that answer, right, sir?
EMI formula, you have to do it in a modified manner. Here, this is not EMI. See, in EMI, what is happening? You are granting 75 lakh now. The customer has to pay this 75 lakh along with the interest. So that is coming to some 100, 120 lakhs. We have discussed on question earlier, no?
Yes, sir.
Here it is not like that. What is the 75 lakh? The 75 lakh is the amount which comes at the end of 15th year, because the borrower is not making any payment, because he has no income. If he had any income, he would not have taken this reverse mortgage loan. So he doesn't have any income to service this loan. So no repayment. So every month the bank is giving an installment, and for every installment, bank will add the interest. And this installment plus interest, I will add up to 75 lakh at the end of 15th year. So the 75 lakh is not the loan amount, it is the future value. And you have to calculate the installment. That means you have to calculate A, the annuity. So this is...
Sir, നമ്മുടെ Macmillan page number 30, it is mentioned that the formulas property value they have taken, sir.
Property value.
Property value they have taken. Here we are taking a loan amount, no? In that
Yes.
formula.
Yes.
But in the Macmillan textbook, the formula is property value into LTV ratio into Y divided by 1 plus I the whole
Same
raised to
thing,
N
madam.
minus 1.
It's same thing, madam. It's same thing. See, I have taken the loan amount. There it is LTV. What is LTV?
No, sir. LTV is correct, sir. We have taken, but I am telling the first value, property value.
Yes.
Here we have taken loan amount into LTV.
Same thing, madam. Same thing.
It is same thing, madam. It is same thing. You
Adam doubt is property value is 1 crore, na sir? 100 lakh, na?
Property value 1 crore. 1 crore LTV, how much you are getting? Property value 1 crore. 1 crore LTV, how much? 75 lakh. So same thing. I have taken 75 lakh. You do it according to, if you are following the Macmillan text, follow it.
No, sir. If the question they give LTV as one of the parameter to find out the thing, then that formula will be used like that, sir. Or
same thing, no. 75% they grant, or LTV is LTV means loan to value is loan to value. They will give same thing, 75%. One and the same thing only, no. You can take it.
Margin 25 or LTV 75, same thing.
Exactly, same thing, same thing.
Sir, here annuity due or ordinary, sir, because the
ordinary annuity. Because
end of the month,
end of the month only they are giving. The bank is giving end of the month only. So you can use the end of the period annuity. A, to find out A, it is future value into R by 1 plus R the whole raised to minus 1. That formula you can apply. You will get 19,820 as the monthly installment. So that is if the borrower, Mr. Thomas, wanted every month. Next, if the bank charges...
Sir, is there minimum and maximum period for reverse mortgage loan?
15 years. Maximum is 15 years.
Maximum 15.
Sir, it every month on
What you look at
monthly
the question.
installment alla choichekkunna madam.
Yes,
monthly installment kandupidikkendathu.
What is the monthly installment?
Okay.
So it is every month. Next, bank charges interest at 12%. What is the monthly installment Thomas gets? Second question. So the rate of interest is, instead of 9, it is 12%. So you have to replace R with 12 by 1200. Look at 12 by 1200 is coming to 0.02. Use the same formula. You will get the EMI, the monthly installment as 15,013. That means the person gets every year 15,013 for next 180 months. And at the end, on 180th month, the value with interest will be 75 lakh, approximately. Suppose he wanted quarterly installment. Then R takes the value 9 by 400. And then 15 year becomes 15 into 4, 60. Same formula you can use. If he wanted annually, he wanted the repayment, the installment every year, then R will be 9 by 100, N will be 15 year. Apply the same formula. You will get every year, he gets 2,55,440 for next 15 years. Is it clear?
Yes, sir.
And the last one, suppose Thomas wanted 20,000 per month. What should have been the value of the property required? So if he wanted 20,000, using the formula, you calculate the future value. Installment A is 20,000. What is the future value? A by R into 1 plus R the whole raised to minus 1. You will get the value as 75,68,001. So this is the loan amount. So what would have been the value of the property? This divided by 0.7 because bank grants only 75%. So 75,68,001 divided by 0.75 gives you 1,90,668.
So what is the logic, sir? Once again, sir, please. Last line.
Last line, see, here, suppose Thomas wanted every month 20,000. How much worth property he should grant? He should give as mortgage. So for that, you have to work out the loan amount. How do you get the loan amount? The future value. future monthly 20,000. That means A is 20,000, R is 9%. 9% means 9 by 1200, 0.0075, and N is 180. Use the formula for end of the period annuity, future value. You got the value as 75,68,001. That means if Thomas wanted 20,000 every month, it will accumulate to 75,68,001. So that is the loan amount. So for sanctioning a loan of 78,68,000, how much he has to pay as security? This divided by, because bank grant only 75%. So this divided by 0.75 gives you 1,90,668.
Is there any upper ceiling for monthly pension, sir? No.
No. The ceiling is depending upon the value of the security. That's all.
No. That 20,000 per month. Can we? If someone asking for 50,000 or 1 lakh per month, is it possible?
You can.
Okay.
Provided adequate security is there.
Right.
Now amortization. What is amortization? It is same thing as depreciation. The only difference is in the case of tangible assets, the reduction we use the term depreciation. In the case of intangible asset, we use the term amortization. So amortization is for intangible asset or non-physical asset. What are the intangible assets? Say your patent or goodwill or trademark or preliminary expenses. These are intangible assets. So that is what amortization. Now, I think one question I have omitted in the list. On interest, I have given a question. I think this one. A bank offers to pay a sum of rupees 80,000 at the end of 6 years to its investors who deposit rupees 10,000 annually for 6 years. If the corresponding factor for 6-year annuity is 7.913 for 11% and 8.115 for 12%, the implicit interest rate offered by the company will be close to dash percentage. Here, look, what is the meaning of the factor for 6-year annuity is 7.913? The factor for 6-year annuity is 7.913 means if a person gives 1 rupee every year for a period of 6 years and he is getting 11% interest, he gets at the end of 6 years, he gets 7 rupees, 7.913 rupees. Similarly, if a person deposit 1 rupee each and the interest rate is 12% for a period of 6 years, at the end of 6 years, he gets 8.115 rupees. That is the meaning of the factor for annuity. The factor for end of the period annuity. So here the person is depositing 10,000 every year. So if the annuity, the factor is 7.913, how much he should get? He should get 10,000 into 7.913 at 11%. It coming to 79,130. If the interest rate is 12%, what should be the future value? 10,000 into 8.115, 81,150. But here he is getting 80,000. So it is more than 79,000 and less than 81,000. So it should be between 11 and 12. So the probable answer should be 11.5. Similar question had been asked on this. Got it?
Yes, sir.
Yes, sir.
Okay.
Sir, credit card case study once.
Sir, ഇവിടെ annuity factor എന്ന് പറയുന്നത് നമ്മുടെ ആ ഫ്യൂച്ചർ വാല്യൂയുടെ ഫോർമുല കണ്ടുപിടിച്ചിട്ട് നമ്മൾ ഒരു പെർസെന്റേജ് അറിയില്ലേ, അത് അവര് ചെയ്യാണ്ട് പെർസെന്റേജ് കൊടുത്തു.
Otherwise, you have to calculate 11%, 11.5, and 12% to calculate for 1,000 rupees annuity, 10,000 rupee annuity for a period of 6 years. At 11% you have to calculate, 11.5 you have to calculate, 12 you have to calculate.
Future value of the annuity.
Exactly. So instead of
last time. Yeah, please continue, sir. Sorry.
Last time?
No, sir. Like last time there was a question from cost inflation index, cost index. So just wanted to know like what it was.
That is capital gain, no? Post inflation.
Oh, that was okay. Okay, capital gain.
Capital gain tax. Capital gain tax.
Okay, sir. Okay. Okay. Thank you.
Sir, numerical will be
Discuss
probably
about
how many marks?
credit
20
card
to
case
25.
study, sir.
Credit card case study you want once again?
Yes, sir. Big one.
Sir, numerical will be how many marks? Probably 20 to 25 marks.
25 marks maybe.
Can't say. Ranges from 10 to 20, 25. It depends on the person who is setting the question. And in BFM, I think last Sunday in BFM, the morning batch candidates were telling that more questions were on theory. But in the afternoon, candidates were telling that a lot of problems were there.
I have got in 2 p.m.
How was it? Was it more theory oriented or a lot of numericals?
Theory
oriented.
When I wrote in the morning, sir, it was totally a theory. Only 2 studies were came.
Yes,
in 2 p.m. Sir, deep theory and numericals.
Okay. So we cannot predict, my dear friends. It can hear this way or the other way. So you should be well prepared. Suppose numerical comes, probably the numericals can come only from these areas. Probably.
So in the same time, some questions are also different for different persons, sir.
Sure. No, same time I think the question will be same. For example, say 9 to 11.
No, sir. There are changes in the questions also.
Different question papers, sir, for the same time.
The set of questions and the entire type of questions are also different.
10 to 20 question will be changing, but 80%.
See, I thought that in one batch the questions will be same, but maybe in different order. The first question for the first candidate, maybe then the question for the other candidate. But the set of questions probably, but that's what I understand. I don't know. You want the case?
Whether they will ask any housing loan amount calculation for retail banking, sir?
Housing loan amount, they can ask, but those things I think Rajiv sir has told, or you are doing it in your day-to-day banking. But how much per margin, those things, basic things only. I don't think that much questions will be there on numericals part. The scope is very less. See, credit card, these are all the important points you have to highlight. One is the billing date. Next, the due date. Last date to pay the bill. Next is interest-free period. This is applicable only if a person has paid the bill in full in the previous bill. Then interest-free period is not eligible in these 4 situations. Only minimum amount is paid. Payment made more than minimum, but less than the entire amount, or less than minimum, or a cash withdrawal. So in the case of cash withdrawal also, there is no interest-free period. Remember, this interest-free period is applicable only for purchase of merchandise. If you are withdrawn cash, because most of the card allow you 10%. If 1 lakh is the limit, you can withdraw 10% of the limit as cash. But that cash, if you withdraw from day 1 onwards, it charges interest. Remember that. So don't withdraw cash on credit card. Then minimum amount due, 5% of the amount outstanding, very confusing to most of you. 5% of amount outstanding or 250, whichever is less. Look what I've written in the bracket. If the amount is outstanding amount is less than 250, then the entire outstanding. Now look at this case. A credit card holder. Pardon? A credit card holder is having a limit of 1 lakh. He purchased the product of 50,000 on 1st July. The billing date is 10th every month. Maximum interest-free period is 20 days. Please mute. And interest rate charged by the bank is 3% per month. Answer the following. Please mute. Please mute the participants. So interest charge is 3% per month. The card holder paid the entire outstanding after 30 days of purchase. How much interest he has to pay? This is the question. So the billing date is 10th July. So 20 days interest-free period. So due date 30th July. Here the date of purchase is 1st July. And he paid the entire dues after 30 days of purchase. That means when it is given 1st July they have purchased, after 30 days of purchase. That means he paid it on 31st. But the due date is 30th. So that means he is not eligible for interest-free. The interest has to be charged for how many days? From the date of purchase. From the date of purchase is 1st July. From 1st July to 30th July, 30 days. 30 days interest you have to pay. At what rate? 3% per month. 3% per month means 36% per year. So 3 into 12 by 365.00. This is interest per day. If you want for 30 days, for 50,000, you multiply with 30 and 50,000. You will get 1479.45. Any doubt?
No, sir.
Clear.
If he made the payment on 30th?
He need not pay any interest.
Right.
If he make the payment on 30th, 30th is the due date. He will enjoy the entire interest-free period. Not entire, from 1st July to 30th July. He gets the benefit of 30 days interest-free. Now look at the second question. Same situation. 1 second. Card holder, same card holder, limit on lakh, purchased the product on 1st July, 50,000. But this he has purchased on 1st July and the billing amount is 10th of every month. Maximum interest-free period is 20 days. If the interest charge is 3%, answer the following. If the purchase of 50,000 was made on 11th July, instead of 1st July, suppose the purchase was made on 11th July and he paid it after 45 days. What is the interest he has to pay?
No interest.
No interest because he made the purchase on 11th July. This 11th July purchase will come in the bill of 10th August, isn't it? So this will come in the bill of 10th August and 10th August, the due date will be 30th August. Now he paid it after 45 days from the date of purchase. Date of purchase is 11th July. Calculate 45 days from 11th July. 11, how many days? 21 days in July and 24 days in August. So 25th August he paid. But the due date is 30th August. He paid well in advance. So no need of paying interest. He got 45 days interest-free period because he had purchased it on 11. That's what I told you yesterday also. Whenever you do a credit card purchase, you look at the billing cycle and you try to make the purchase. In the case of big purchases and all, you can avail the maximum interest-free period of 49 or 50 days if you do the purchase immediately after the billing date. Suppose 10th is the billing date, you make the purchase on 11th or 12th. You get maximum interest-free period. Am I clear? But instead of that, the 10th is the billing date. You have made the purchase on 10th August. You will get only 20 days interest-free period. I think it's clear. Now, effective interest, I told you, and annual interest. 3% means 3 into 12 is the effective interest. Sorry, 3 into 12 is the annual interest. And effective interest, you can apply the formula 1 minus r the whole raised to minus 1 into 100. You get 42.58 as the effective interest or annualized interest. Annual interest and annualized interest are different. Now, this case study, I think we have discussed, isn't it?
Yes, sir.
So, any other point you want to discuss? Tell me.
Sir, the annual interest and annualized interest one more time, sir.
Annual interest. If the rate of interest is 1%, what is the annual interest? 1 into 12, 12%. If the rate of interest is 2% per month, annual interest is 2 into 12, 24. If the rate of interest is 2.5% per month, annual interest is the 2.5 into 12, 30%. So that is annual interest. You per month interest multiply with 12. But if you want the effective interest or annualized interest, use the formula 1 plus r the whole raised to n minus 1 into 100. Where r is the, you can take the monthly interest. 3% means 3 by 100. R is 3 by 100 and n is 12. So 1.03 raised to 12 minus 1 into 100. It gives you 42.58. Similarly, you can, if it is 2% or 1%, appropriately you can put the value for R.
So this is what rate, sir? This is daily rate. Huh?
This is effective rate. Effective rate. Actually, even though 36% is the amount, since this is monthly compounding, the effective rate is something more, 42.58%. Per day interest, we can take it per day interest.
Per day.
Yes, yes, yes. Not able to hear. Please.
For the municipal tax, sir, last question. Adding that 50,000 and for net annual.
For income tax benefits, there are two exemptions. One is standard deduction, another is interest on housing loan. That means this particular house property, they have purchased out of a loan. And you can claim exemption subject to a maximum amount of 2 lakh as interest. In this case, the interest portion is 50,000. He had taken a loan 5 years ago, and the 50,000 is the interest charged by the bank for that loan during the current year, during the year. So 50,000 is the interest portion, and 30% is the standard deduction. 30% on what? 30% on NAV, net annual value. And net, how do you get the net annual value? Net annual value is gross annual value minus municipal tax. Here, municipal tax is 10%. 10% on what? 10% on the municipal value. Because what is municipal value? Municipal value is the value assessed by the municipal authorities or the local government to fix the building tax. So this municipal value will be different from the standard rent or fair rent or actual rent. The actual rent may be 12 lakh or 15 lakh, but municipality, they charge, or the corporation, they charge the building tax as per the assessment done by them. So they have assessed the value of the property as 10 lakh and 10% is the tax. So 10 lakh, 10% is 1 lakh. So 1 lakh is the municipal tax. So 11 lakh is the fair rent. So 11 lakh minus 1 lakh is the NAV. That means 10 lakh is NAV. 30% of NAV is standard deduction. That is coming to 3 lakh. And 50,000 is the interest. So the person can claim exemption of 3,50,000 under section 24 of Income Tax Act.
Okay, sir. Thank you. Thank you so much.
Okay, what is I am not able to hear.
Thank you, sir. Thank you.
Okay. Anything else?
Thank you, sir.
There will be problem from amortization, sir. We just skip
Sir,
it.
a credit card in the interest in the credit card in the
Credit
Sir,
card.
tomorrow class is there, sir.
No. Tomorrow is only 1 day left for you. No, it's very crucial time. Now I think almost it is covered.
Amortization.
For amortization.
Amortization, I told you, just like depreciation only, but there is no various methods. You can do it equally. See, I've given an example. 1 second. Amortization. Suppose there is a firm and they have capitalized the 2 lakh rupees as patent. So here the value of the intangible asset is 2 lakh. And they decide to write it off over a period of 25 years. So what is the amortization expense per year? Just like straight line method, you have to divide this 20 lakh with 25. So per year, they will provide 8,000 rupees as amortization, so that at the end of 25 years, this patent becomes 0. That is what amortization, nothing else. The probable question what they can ask is, amortization relates to what? Amortization is the reduction in the value of an intangible asset over a period. And what are the intangible assets? The patent or goodwill or trademark or preliminary expenses. So these are all the intangible assets. And suppose a firm or an enterprise, they have capitalized a certain amount as an intangible asset. And this cannot be kept there permanently. It has to be written off over a period. So the company says, we will write it off over a period of 25 years or 20 years. If they decide they will write it off over a period of 20 years, 2 lakh divided by 20. Per year, they write off 10,000 rupees. So that is what amortization. Much of probably numerical, there is no scope in amortization.
Sir, encumbrance factor FSI, adinte problems.
FSA, sometimes there can be, but I'm not prepared on that. Sometimes they will ask floor area, isn't it? Construction to the floor area. FSA. Sometimes yes, they can ask. See, the credit card, what is your doubt? Credit card, this table is very important. First, what will be given in the question? They will give you the billing date. Next, they will give you the interest-free period. Next, they will give you the rate of interest. So these 3 things will be given in the question. So if the billing date is as 5th of every month, that means the purchases made from 6th of the previous month up to 5th of the current month will be included. Billing date 10th means the purchase made 10th February bill date is 10th February means from 11th January up to 10th February will be included. And 20 days interest free means the billing date is 10. From the billing date, you get 20 days time to pay off the bill, to settle the bill. That is called the interest free period. So the credit card issuing bank may generate a bill on 10th of February, and it will be intimated to you. This is the bill amount. You have to pay on or before 30th of February, or say 28th of February or 3rd of March, whatever it may be. Then you have to make the payment either on due date or before due date. But there are certain options. You can make minimum amount due. That also will be given there. Minimum amount due will be there. Or you can pay a part amount. Now here comes, what is the logic in paying the minimum amount? The minimum amount doesn't mean that you need not pay interest. You have to pay interest. The interest exemption will come to you only if you pay the entire bill amount either on due date or before due date. If you are making only a part payment, then you are not eligible for interest free for the remaining amount. You made a purchase of 50,000, you paid 30,000. Means the balance of 20,000 will start accruing interest. So that is one point to remember. Next, coming to minimum amount due. What is the logic? The logic is the minimum. Suppose you pay the minimum amount. That means the card is live, card is active. You can utilize, you can again put through the transaction. But once you are not even making the minimum amount, then the card becomes a substandard. It becomes an NPA. That amount becomes NPA, but the 90 days norm is there. That is there. But they will blacklist if you're not making the payment of the minimum amount. Okay. Now, these are all the example. Suppose a person has purchased. I've explained. You want me to explain once again? No need. Okay. I think this is shared. All the slides have been shared.
Okay, problem is there, sir. You explain that if you don't mind.
Which one? Which one?
Sir, explain.
Problem is there, sir.
Which one? This problem.
36 slide. 36 slide.
This one.
Yes, sir. If you don't mind.
See here, the card limit is 1 lakh. He purchased 50,000 on 11th November. And interest charge is 2.5%. And the billing date is 10th of every month. Maximum interest free period is 20 days. These are all the given data. He made another purchase of 50,000 on 32 and paid 30,000 on his credit card dues on the same day. Based on the above data, answer the following. Minimum amount due on the bill dated 10th December. So what will be the bill amount of the bill dated 10th December? It will be 50,000 because he had made a purchase of 50,000 on 11th November. Next purchase he did on 30th of December. So 30th of December will not come in the 10th December bill. So the 10th December bill amount is 50,000. And what is the minimum amount due? 5% of 500. 5% of 50,000 is 2,500. So the minimum amount due is 2,500 in this case. Now next, what is the annual interest rate? Per month, 2.5. How do you get annual interest rate? Annual interest rate is
12.
Yes. Into 12, 30%. And third is effective interest. Use the formula. 1 plus R the whole raised to n minus 1 into 100, where R is 2.5. So 2.5 by 100, 0.025. So you will get it as 34.49%. We have done similar question. Now the third is something different. Fourth. What is the fourth one? X would like to settle the total dues. One second. Hello? Class. Okay. So the fourth is X would like to settle the total credit card dues on 10th of January. So what is the 10th January date relevance? 10th January, calculate what is the amount due. So in the next bill is 10th December is the previous bill. In the previous bill, there is a balance of how much? He had paid only 30. So there is a balance of
20,000.
20,000. So there is a balance of 20,000 in that. In addition to that, he had made another purchase of 50,000. So total purchase made is 50 plus 20. But he has to pay the interest also. How do you calculate the interest? Interest, you have to calculate separately for 20,000 and 50,000. How do you calculate for 20,000? Because the 20,000, the interest will run from the original date of purchase. Original date of purchase is 11th November. From 11th November onwards, 30th December, how many days? You calculate. November, how many days? December, how many days? And December, that's all. So December, 29 days. And then November, December, and January, isn't it? He wanted to settle on 10th of January. So how many days? Count it. 60 days. 60. So for 20,000, he has to pay interest for 60 days. How do you calculate? 2.5 per month. So 2.5 into 12, that is per annum, into 60, into 20,000, divided by 36500. That is the interest portion for the 20,000. Now coming to the 50,000, he is not eligible for interest free for this 50,000 because there is an outstanding amount in the previous bill. He is not eligible. So for 50,000, he made on 30th December and 30th December to 10th January. How many days? December 2 days and January 9 days. Total 11 days. So 11 days interest for 50,000. 50,000 into 2.5 into 12 into 11 by 365. That is coming to 986.3 plus 452.05, 1438.35. So the total dues is 20 plus 50 plus the interest, 71,438.35.
So what is that 11, sir?
11 days. Second purchase when it is.
Okay. Sorry.
30th December. So from 30th December to 10th January. Because he is not eligible for interest-free period because he had not paid the previous bill. Suppose he had paid the entire amount previous bill on due date, then he need not pay any interest. He gets up to 30th of January, isn't it? Okay. Anything else?
No, sir. Thank you.
Okay. All the best. All the best.
I shared this also.
It's very useful.
Already shared.
Just now, sir, I'm shared the problem from Telegram group is there, sir. I didn't get that answer, sir.
Where you are shared in the group?
Morning group, sir. May I tell the problem, sir?
Mr. Shanoy brought a house, 10 lakh, sold it 17 for 70 lakh. Calculate the capital gain using the following information. Cost of inflation, 11, 12, 200, 17, 18, 270. Why you wanted? Why it is difficult?
10 lakhs into 272 divided by 100.
272 by 100.
20.
2.72. 2.72 into 10 lakh.
Into 10 lakhs, sir. Is getting so 2.7.
27 lakh.
27 lakhs.
And order. You sold it for,
sir.
they sold it for 70 lakh. So 70 minus this 27. That will be the answer.
27. Not getting no, sir. 3,34,507 is answer, sir.
That is wrong. That may be the tax. Capital gain, this is wrong. Brought a house 1 2 for 10 lakh. Sold the same in 17, 18. 1 2 was 100 and 17, 18, 272. 272 by 100, 2.72. 2.72 into 10 is 27 lakh 20,000. So 27, 20 minus 70.
Minus 70.
How much you are getting?
70 is equal to 42.
That is the answer. That is the answer.
80,000, sir.
That is the answer. This is wrong. Maybe a lot of such questions there will be wrong. From where you got this?
From Telegram group, sir.
Maybe wrong. It is wrong. This is the concept. It's wrong.
Sir, one depreciation question, sir. The truck cost 10 lakh and its salvage value is 2 lakh. Depreciation is computed under WDV at 20%. What will be the profit or loss on sale of truck at 6 lakh at the end of second year?
Once again, let me. It is not my question. No, you have got it from somewhere, isn't it?
Yes, sir. Yes.
Tell me.
Cost, original cost 10 lakh, sir.
1 second. Original cost 10 lakh. Okay.
Salvage value 2 lakh.
2 lakh. Yes.
If the depreciation
is calculated.
Depreciation is computed under WDV method at 20%. That is rate of depreciation under WDV method.
Yes.
What will be the profit or loss on sale of truck at 6 lakh at the end of 2 year or second year?
Second year. So you have to calculate the book value. So book value at the end of second year is equal to 10 into 1 minus 0.2 the whole square. That is 10 into 0.8 square. That is equal to 10 into 0.64. Am I correct?
Sir, salvage value will reduce, no, sir?
Whether you were attending to my class?
Sorry. That is in SLM method. This is WDV method. Sorry.
So the book value is 6,40,000, isn't it?
Yes,
so
sir.
this is the book value. For how much it is sold?
It is sold for 6 lakh, sir.
6 lakh. So there is a loss of 40,000.
Sir, how did you get 6,40,000, sir?
10 lakh into 0.64.
0.64. Is 6.4 lakh.
10 means 10 lakh. 10 lakh. I have just written 10. 10 lakh into 0.64.
Okay,
you get 6,40,000, isn't it?
So this formula is for finding out the book value under WDV method.
Yes.
Book value of the WDV under WDV.
Yes. Remember, for WDV method, don't take into account the salvage value. That is given in the question to confuse you. Don't account it. This is applicable only for straight line method or sum of the S-digit method. Okay.
Sir, one last question, sir. I didn't get the 1.1 power 240. This one, you are telling the 24 into 10. I'm not getting the same answer, sir.
Do you have that calculator with you?
Yes,
the
sir. Yes.
Calculator which, yes. So you take 1.1 into 1.1
Yes, sir.
is equal to, what's the answer? 1.1. And on the left top, how much you are getting a number?
3, sir.
3. Now you want 1.1 raised to 180, isn't it?
Yes, sir. Yes, sir.
This 1.1 raised to 180, I can split into this raised to 10, the whole raised to 80. Or you can this split into 1.1, the square raised to 90. Am I correct? In any
Yes, sir.
way?
Yes, sir. Yes, sir.
So take this one, that will be more simple. So now you got 1.1 square. This is one. Now you erase this. You take 1.21.
1.21. 1.21. Okay.
1.21.
1.21.
Put equal sign. Keep on putting the equal sign till you get 91 on the left hand top. How much you got?
1 minute, sir. Thank you. 282282.
1 minute. Please, 180. How much you are getting?
2.82282, sir.
Yes, yes. That is the answer. Why then?
We have an easy method for.
Actually, we have to take 1.21 power.
1.21 power, how much? 90th power.
90, sir. 90th power.
See, suppose you want 180. This maximum the computer will give only up to power 120.
120 only.
Yes, so this you have to split. You have to use the formula a raised to m, the whole raised to n is a raised to m into n. You have to apply this formula. So if you want a particular number raised to 240, this you split. 240 you can split into, say, 3 into 80. So you take the, suppose you want 1.01, this cube you take. Then for this you take its 80th power. Means
sir.
Keep on tapping until you get 81.
Yes, sir.
In another easy method, only simple method, sir. 180 split into 9 into 2. Sir, just write down, sir, please.
180?
180, 9 into 9.
9 into?
Into 2.
Into
2.
Again?
Into 5. Yes, into 5. 2, again 2.
Okay.
Into 5. Again into 2, sir.
Into 2. Okay.
Then now 1 plus 1 into 1 plus 1, 2. 2 times, sir.
1.1.
Sir, 1.1 into 1.1, 2 times, sir. Then press up to 9. 1.1 into 1.12 is equal to.
Yes, that you can do. Again, then you have to go for 5, isn't it? Isn't it? That is also possible. You can see here this 180 you can split because this is 9 into 18. 18 into 5, 90. 90 into 2, 180. So in any fashion you can type. If you have any way you can do it. No issue.
Okay.
Which is convenient to you can use that.
Sir, one more question, sir. A company acquired a machinery costing 90,000 on 1/1/2019.
1/1/19. Okay.
Spent 7,000 for transportation. 3,000 for installation. What is the depreciation amount provided for the financial year ended 31st March 2020 under WDV method if the rate of depreciation charged is 10%?
1/1/19 they have acquired the machinery. You have to calculate 1/1/2019, isn't it? 2019. Okay. So here one point to remember is this transportation and installation should include in the original cost. So original cost of the machine is 1 lakh. And written down percentage is 10%. So 31/3/2020, how many? This is for first depreciation will be as on 31/3/2019. Next, 31/3/2020. Isn't it? So this depreciation, it is proportionate. How much? For 1 year, what is the depreciation? Under written down value method, 1 year.
10%.
10%. How much? Tell me.
10,000.
So for 3 months,
30,000.
He acquired on January. So 3 months, January, February, March. 3 months.
3 by 12, sir.
No.
Yes. Tell me. For 1 year, it is 10,000. For 3 months,
10,000 by 3.
10,000 by 3. 10,000 for how many months?
10,000 for 12 months, sir.
12 months. So per month, this into 3. Very difficult.
2,000, sir. 2,500, sir.
2,500. Now, what will be the book value at the end of first year? 97,500, isn't it? Isn't it?
Yes, sir.
And what is the depreciation in the second year? 9,750. What's the question?
That only, sir. What is the depreciation amount as on 31/3/2020?
For the year. For the year.
For the financial year.
For the financial year, it is 9,750.
1,500 is for 1 month, no?
Pardon?
2,500 is for 1 month, no, sir?
No.
It's for 3 months.
Very simple arithmetic, no? See,
yes, sir, I got it, sir.
See,
1,500 is for 3 months.
9,750 rupees from where will it come, sir?
Pardon?
9,700.
10% on this, because the written down value percentage is 10%.
Oh, okay, sir. Yes, got it, sir.
Stop it. It is 10 o'clock. Bye. Okay.
Thank you, sir. Thank you so much.
If there is anything left over, you can share it in my personal number, WhatsApp. I'll reply it.
Give me, sir, your personal number.
9496 25 4017.
949625
4017. Okay, thank you all. Bye. All the best. All the best.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Bye, sir.